Now, I'd like to begin with a little bit of statistics. Now, the African continent has the highest percentage of women entrepreneurs in the world. According to the Global Entrepreneurship Monitor report, that's 2016-2017 Women's Report, it says a female entrepreneurship rate in sub-Saharan Africa is 25.9% of the female adult population, meaning that 1 in every 4 women starts or manages a business. Also, women typically reinvest up to 90% of their incomes in the education, health, and nutrition of their family and community, compared to up to 40% of men. This means that investing in women's businesses can transform societies, but there are many challenges confronting access to finance for women, and this is where Afawa comes in. So this is where Afawa comes in. Now, what Afawa does is essentially to help bridge that financing gap. We're told it's about $42 billion, and Afawa is trying to unlock about $5 billion to support women entrepreneurs across Africa. So we're looking at a huge gap of about $42 billion, and Afawa is only trying to provide about $5 billion. There's still some bit of a gap, but I think Afawa, through its implementing agency, AGF, is doing quite an awesome job. Please put your hands together for them. So they realized that there are quite a number of challenges confronting women in the area of financing, access to finance, also in capacity building and skill set. So these are major challenges confronting women. So AGWA is not only, AGF, I beg your pardon, is not only providing the financing to the banks to give to these women entrepreneurs, but also one major debilitating factor, which has to do with the risk factor, so they are taking the risk guarantee. About 75% of that is being taken by AGF, and the banks get to take 25%. So that's quite some enormous work there. And also, they do capacity building. We're going to be seeing a lot more of that in the next 2 days. They're going to be training the banks here in Ghana. And then also, they're going to be liaising, one of the last pillar, which is their liaison efforts with government entities to ensure that women have that enabling environment in terms of the regulations. And that's why we have the Deputy Governor of the Bank of Ghana, who is quite vexed in that area. Please, ladies and gentlemen, let's begin with our first speaker. I'd like to invite the Chief Executive Officer of the Ghana Association of Banks, I beg your pardon, Mr. John Ewa. Please put your hands together for him.
The second Deputy Governor of Bank of Ghana, the Group CEO of the Africa Guarantee Fund, Country Manager of AfDB, Africa Development Bank, Bank Managing Directors here present, representatives of the Diplomatic Corps, distinguished guests, ladies and gentlemen. Empowering women to assume their enviable role in the socio-economic development of nations across the globe, and particularly towards the development of economies in Africa, has attracted the attention of governments, financial institutions, policymakers, and entrepreneurs in recent years. Throughout the world, Africa remains the continent with the youngest population. Moreover, nearly half of this population comprises women. However, effective implementation of women-led initiatives on the continent is often constrained by a number of pertinent factors, including limited capital for investment and business opportunities. It is no exaggeration to note that providing the requisite financing for women-led small and medium-sized enterprises remains a major challenge to many African economies. Available statistics from the Africa Development Bank in 2022 revealed the financing gap for women-led enterprises as approximately $42 billion, as has already been mentioned. To stem the tide and ensure consistency and improvement in women's active participation in entrepreneurship and national development efforts, the Affirmative Finance Action for Women in Africa, Afawa, an initiative of the Africa Development Bank, kickstarted some years back. The first Afawa Finance series was organized in Dar es Salaam in Tanzania in 2022. The initiative, which was ably and strategically organized by the Africa Guarantee Fund, the Africa Development Bank, and in collaboration with the Africa Development Bank and the Tanzanian Bankers Association, afforded participants the opportunity to improve the understanding of the urgent need for significant increase in women's access to finance to guarantee the establishment of new businesses and assure business expansion and competitiveness. Africa is home to some of the world's growing economies. Quite expectedly, the Afawa Finance Series seeks to empower women, improve their access to training and finance, to affirm their meaningful contribution to economic growth, both at the national and continental levels. Commitment of the Affirmative Finance Action for Women in Africa's initiative towards providing financial institutions with technical assistance and fostering enabling environment for women entrepreneurs to succeed can therefore not be overemphasized. The Afawa initiative is carefully designed to assure women of effective participation in value creation in Africa's growing economies while reducing identified barriers to appreciable levels. The Guarantee for Growth, G4G, program was strategically introduced to whet the appetite of financial institutions on the continent towards lending to women who are noted for their exemplary role as good business actors with strong credit history, and noted for reinvesting, as we have already been told, up to about 90% of their income in health, education, and nutrition for their families and communities at large. Through the initiative of the Afawa for Women, Affirmative Finance Action for Women in Africa, and collaborative efforts with the Africa Guarantee Fund, the Africa Development Bank is envisaged to work directly with financial institutions in Ghana to improve their capacity to effectively serve women's markets and allow women-led businesses to thrive and scale up. Indeed, the Afawa Finance series sets the journey of economic empowerment for women-led small and medium-sized enterprises in Africa. Further, it creates the enabling environment for financial institutions to practically demonstrate the commercial and economic benefits of providing the finance needed by women entrepreneurs, and ensures availability of innovative products that could redefine growth of women's small and medium-sized enterprises while responding to their basic needs. The tailored workshops and training programs for this year's Afawa Finance Series are expected to help representatives from the various financial institutions to enhance their understanding, practically improve on advice related to gender sensitivity in lending practices, and significantly improve how these institutions could leverage the 2x challenge launched during the G7 summit in 2018 as bold commitments inspiring governments, ministries, departments, and agencies, and the private sector to invest massively in Ghana's Africa's women, in Ghana and Africa's women. Afawa has the potential to introduce innovative solutions that could ensure drastic transformation of the banking and financial landscape in Africa. It is hoped development of the digital platform for the 50 Million Africa Women Speak initiative will be expedited to effectively connect women entrepreneurs in various parts of the continent. Sustainability of the Afawa Finance series is therefore required to assure tremendous impact and mutual benefits in the medium to long term, while demonstrating true value of women and accelerating economic growth. On this note, I wish all of us a fruitful deliberation and conference and a training program for the next couple of days. Good morning and thank you.
Thank you very much, Mr. John Iwa, the Chief Executive Officer of the Ghana Association of Banks, with that opening remark. And you talked about the second pillar of the program, which has to do with the capacity building. I'd just like to inform you that, just like I said in my earlier preamble, we're going to be having, over the next 2 days, a training session for banks. And so the same link with which you registered for this program, you can log on to that same link and register for that training program. I'd like to welcome our second speaker, and I'm sure most of you will be quite familiar with her. She's a country manager for Ghana for the African Development Bank. Ladies and gentlemen, join me, welcome Airusalam Fasika. I hope I got the name right. Please put your hands together for
Good morning, everyone. Second Deputy Governor, Bank of Ghana, Ms. Elsie Ado Awaji, my dear sister, a very warm welcome. Representative from the Netherlands Embassy, representative from French Embassy, representative from the Ministry of Finance, the President of Ghana Association of Banks, Group Chief Executive Officer, African Guarantee Fund, Mr. Julius Nkankam, I hope I've pronounced it well, and my dear sister Esther, Afawa coordinator, who has come with her team a couple of days ago. Welcome to Accra. Dear ladies and gentlemen, it's a great pleasure to welcome you all at the opening ceremony of the first West Africa edition of the Affirmative Finance Action for Women in Africa Finance Series being held in Ghana this morning. This event, which is co-implemented by the African Development Bank, the African Guarantee Fund, and the Ghana Association of Banks, is a testament of our commitment to promoting women's economic empowerment and financial inclusion in Ghana and across the continent. In 2020, the bank's board of directors approved the 2021 to 2025 gender strategy, putting women's economic empowerment at the center of its high-five development priorities. I'm sure you're all familiar with the bank's high-five priorities. The first pillar of the strategy is the bank's Affirmative Finance Action for Women in Africa, a flagship initiative that specifically focuses on increasing inclusive finance for women entrepreneurs on the continent. To unleash the business potential of women, Afawa aims to close the $42 billion financing gap for women in SMEs in the continent, and is mobilizing $5 billion for women businesses by 2026. The Afawa initiative started implementation in 2021 and has already invested $1 billion to be on lent to women SMEs in 27 countries across Africa. The Afawa Finance Series brings together key financial ecosystem players, public sector and regulatory actors, our development partner community, as represented here by Embassy of French as well as Embassy of Netherlands, and the other development partners could also be in the room. A very warm welcome. So, and women also, entrepreneurs, to discuss country-specific challenges and potential solutions to accelerate access to finance for women, SMEs in Ghana towards improved growth. Over the conference and the next 2 days, we will have the opportunity to hear from our distinguished guests, panelists, experts in the field of finance, and also entrepreneurship that are present here. We will enhance our knowledge about the challenges facing women entrepreneurs in accessing finance in Ghana and how we can contribute collectively to address them. We shall also hear from inspiring women entrepreneurs who have overcome these challenges and are making difference in their communities. The Afawa Finance Series is not just a forum for discussion. It's also a platform for knowledge and actions. We will be providing today capacity building training in gender-lens investing to more than 20 financial institutions and explore practical solutions to increase women's access to finance, such as innovative and tailored financial products and non-financial services, digital technologies, and policy reforms. We will also be identifying opportunities for collaboration between governments, financial institutions, and other stakeholders to support women entrepreneurs. Ladies and gentlemen, Ghana is a country that has made a significant progress in advancing women's rights and gender equality. According to the Bank's Africa Gender Index of 2019, Ghana is ranked 20th out of 51 African countries and has a higher than average continental score when it comes to gender equality. However, there is still much work to be done to ensure that women have equal access to economic opportunities, particularly in the area of finance. The Afawa Finance Series is an important step towards building synergies and achieving this goal. With a population of approximately 32.8 million, of which 49% is comprised of women, Ghana scored 0.946 on the Gender Development Index in 2021, compared to a world average of 0.958. In Ghana, the labor force participation rate among females is 64.5%, and among males is 72.2%. This is for 2021 data. Notably, Ghana is one of the top 3 countries in the world with the highest proportion of women entrepreneurs. Efforts have been underway in Ghana to promote women's financial inclusion through policies and programs aimed at increasing women's access to financial services and enhancing their financial literacy. As an illustration, the National Financial Inclusion and Development Strategy in 2019 included a specific focus on promoting women's financial inclusion. Despite the progress made in recent years in terms of promoting financial inclusion for women, the gender financing gap in the country remained significant, with women being disproportionately excluded from formal financial services and facing a range of barriers to financial inclusions. According to a report by the Ghana Statistical Service, women in Ghana were less likely than men to have access to formal financial services. such as bank accounts, mobile money accounts, and credit. In 2019, only 35% of women in Ghana had a bank account compared to 45% of men. Women were also likely to have access to mobile money services, which have become an increasingly important means of financial inclusion in Ghana in recent years. The estimated MSMEs market size in Ghana includes about 1.8 million MSMEs, of which only 287,300, or about 16.2%, were formal, according to an Afawa Genesis baseline study conducted in September 2021. Within the formal segment, 48.4 were falling in the SME category. Women-led businesses typically have micro and small enterprises characteristics, are informal, and face particular challenges in accessing finance and growing businesses. When considering the same analysis for women MSMEs, the Afawa study indicates that they represented according to the IFC MSMEs finance gap that was. Women entrepreneurs remain and business management skills, as well as social and cultural constraints. Almost half of women MSMEs in Ghana are estimated to need credit, but have no access. And this is about 43%. And another 9% of women need more credit than they have to grow their businesses, according to the Afawa study undertaken. The African Development Bank, through the Afawa initiative, together with its implementing partner, the African Guarantee Fund, and the partnering financial institution, seek to contribute to address this financial but it's also the smart thing to do. The evidence is clear. Women's economic empowerment is critical to economic growth. One of the best ways to grow economies and achieve stronger communities is to empower women and improve their economic opportunities. In fact, research shows that closing gender gaps can stimulate growth, strengthen macroeconomic and financial stability, reduce income inequality, and strengthen climate resilience action nationally. The African Development Bank has, over the years, invested in progressive initiatives that enable women in Africa to thrive in their various endeavors. The bank acknowledges that women are key stakeholders in Africa's integration and economic development, and as such support programs that extend economic opportunities to them. For instance, the Afawa initiative is in line with the country's vision of transforming into a competitive, inclusive, and green economy that the bank is supporting. as well as the National Financial Inclusion in the Financial Sector Strategic Plan launched in 2019, with a specific focus on promoting financial inclusion for women and reducing the gender gap in access to finance. The government of Ghana can continue to count on our support to implement their vision through the Afawa initiative, which is a crucial initiative that has the potential to promote both gender equality and green economic growth. By empowering women entrepreneurs and promoting sustainable practices, the program can help to build a more resilient and prosperous future for Ghana. Deepening access to finance, especially for the women-led small and macro enterprises, the bank is at the forefront in supporting private sector access to finance through its development mechanisms, including our lines of credit, trade finance, and equity investment, complemented by technical assistance facilities. In 2021, the bank has also signed a $250 million portfolio credit guarantee line with the African Growth Fund, our implementing partner under the Afawa, to de-risk the women SME sector and further incentivize financial institutions in lending to women entrepreneurs. In 2021, the bank has approved an African Development Fund grant of $40 million towards the establishment of Development Bank Ghana. The project includes affirmative action quota of at least 10% of DBG funds targeting 2,000 women MSMEs. Narrowing the gender gap in income by supporting more women-owned enterprises. Afawa is co-implementing a $20 million in Ghana with EcoBank Ghana, focused on financing climate resilience agricultural practices. This is funded by the Green Climate Investment Fund. The program aims to empower 400 women-led farmer-based associations and women-led MSMEs involved in the agricultural value chain in the northern Ghana. And it's expected to play a critical role in empowering women entrepreneurs to implement climate resilience agricultural activities and improve their productivity along the agricultural value chain in the most vulnerable agri-ecological zone of the northern part of Ghana. In support of its Feed Africa strategy, the African Development Bank has also rolled out several financial instruments, such as guarantee programs and supporting a range of risk-sharing facilities to de-risk investment to agricultural sector, while addressing market failures hindering positive impacts on women and climate. The Agri-Food SME Catholic Financial Mechanism successfully contributes to the bank efforts in mobilizing additional blended finance resources to deliver its development agenda. The Agri-Food SME Catholic Financial Mechanism aims at leveraging private capital investments that will channel through financial and commercial intermediaries to support inclusive and green growth by investing in portfolio of gender-oriented and climate resilience agri-SMEs along the agri value chain. The initiative is designed to explicitly serve the Feed Africa strategy and complement existing initiatives such as Afawa. Through another project that we have in Ghana, known as the Ghana Incentive-Based Risk-Sharing System for Agricultural Lending Project, 30% of agribusinesses loans are targeted towards women. Last month, that is in January 2023, the bank has launched the post-COVID-19 Skills and Productivity Enhancement Project, which is amounting about 28.5 million US dollar. The sources from the African Development Fund, and this is 100% grant. So this project will ensure affordable access to credit by women and youth through affirmative actions in the $4 million US dollar credit facility to be established. In conclusion, ladies and gentlemen, I would like to thank you all for your participation and express my gratitude to all partners for their support in making this event possible. I reiterate the African Development Bank's commitment to promoting women's economic empowerment and financial inclusions in Ghana and across Africa. Finally, I would like to encourage all of us to take advantage of this opportunity to learn, network, and collaborate. Let us work together to ensure that women have the resources and support they need to unleash their full potential and contribute to the development of Ghana, to the development of our continent. I thank you very much.
Another round of applause for Arusalam Fasika, the country manager for Ghana for the African Development Bank. And I think she put matters into perspective, the role of the AfDB as well as Afawa through its implementing agency, the AGF, why it has to partner with governmental agencies, policymakers, and decision makers to, through regulation, provide an enabling environment for women entrepreneurs to thrive. Also, why they have to, train banks and sensitize them through a needs assessment to carefully curate banking products that meet the needs of women entrepreneurs, and also to sensitize the women entrepreneurs themselves and to build their capacity. And finally, why they have to provide the financing, not only providing the financing, but also helping to de-risk businesses of women by taking up about 75% of the risk guarantee. So they're quite doing a lot in this area. Ladies and gentlemen, help me welcome the Group Chief Executive Officer of the African Guarantee Fund, Jules Ngankam.
Good morning, everyone. So, Miss Elsie Ado Awadzi, Deputy Governor of Bank of Ghana, Miss Arusalam Fasika, Country Manager of Ghana at the African Development Bank, Mr. John Awu, CEO of Ghana Association of Bank, Afawa Donors Country Representative from France and from Netherlands, Afawa Coordinator, Ms. Esther Dassanu, esteemed CEO and MD of Ghana Financial Institution, ladies and gentlemen. I would like, first of all, to express my gratitude to the government of Ghana for their support and presence at this opening ceremony of Afawa Finance Series. The presence of the government of Ghana and the Central Bank of Ghana attest the high priority given to women financial inclusion by the government of Ghana. I also want to thank the Ghana Association of Banks, represented by the president of the association, for reuniting here today the financial institution whose role is key in supporting women SME in Ghana and in Africa. I welcome all the representatives of financial institutions. Together, we will continue to support and offer the best product to our African SMEs. I also wish to acknowledge all the keynote speakers and the panelists who will be steering today's discussion. It's my great pleasure to welcome you to the third edition of Afawa finance series and indeed the first edition in West Africa. This morning, I would like to center my remark around the situation of SME owned or led by women in Africa. You know, when we talk about Africa, we always say Mama Africa. We don't say Papa Africa, but Mama. So it means that if Africa had a gender, for sure, it's a woman. So here I would like to discuss about the situation of Mama Africa. So how is Mama Africa performing? So I do have some good news, but I also have bad news. And I cannot cover all the good news and all the bad news. This morning I would like to focus on 3 good news and 3 bad news. So the first good news is that when we look at the participation of women in economic activity around the world, Africa has the highest percentage of women participating in economic activity. Why is that? You know, what we call housewife doesn't mean anything in Africa. There is no the concept of housewife in Africa. Because the lady that we call housewife, every day they go to farm. So instead of calling them housewife, we should call them farmers. This lady, they sell fruit, they sell food, so they all have a business activity. And when you take that into account, as we are doing the statistic, we realize that Africa, we have the highest participation of women in economic activity, which is really a good news. But we also have a bad news. When we look at the contribution of these women in the GDP, is the lowest in the world. So on one hand, we have the highest contribution of women in economic activity. On the other hand, we have the lowest contribution in the GDP. Why is that? Because most of our women, they are in the informal sector. And the informal sector has the lowest productivity. So the question is, how do we support our women to formalize and to have a better productivity? Let's go to the second good news. In Africa, when we look at the contribution of the women participation in agriculture, is the highest in the world. In fact, 70% of our women represent the labor force in agriculture. And as we all know today, agriculture represents a huge potential for Africa. But what is the bad news? When we look at the percentage of women who own land, it's a disgrace. The workforce in agriculture, we have 70% of women, but only 3%, less than 3% of women in Africa own land. It's something that we really have to change. When we look today at the potential of agriculture in Africa, people tend to say that we have the vast majority of the non-cultivated land in the world sits in Africa. The majority of the workers in agriculture are women, but people who actually own land are not women. Let me go to the third good news. You know, earlier I talked about the situation in agriculture, but our women, they are not only in agriculture, they are in every sector in Africa. When we take entrepreneurship, I think that was said even earlier by the moderator, you know, Africa has the highest percentage of female in entrepreneurship. In fact, 1 out of 4, so 25% of women in Africa have created their own business. When you compare what is happening in other parts of the world, in Asia, it's only 6%. In Europe and in the US, it's 12%. So in Africa, we have the highest percentage of women entrepreneurs. What do? That? They create their own business because they have limited opportunity to have access to the job market. So they have to create their own job. But as I said earlier, is also come with a bad news. We have 25% of women entrepreneurs, but at the same time, only 5% of women entrepreneurs were able to have access to a loan from a bank, which is the lowest in the world. So when you see all this trend in Africa, how do we help women to formalize? How do we make sure that the business they are running can achieve the highest level of productivity? How can we help women to have access to assets, to acquire assets, mainly land? How can we help women to have access to finance? These are the questions that Afawa is trying to answer, and that is why we are here today. So when we look at the Afawa Guarantee for Growth, the objective is to reinforce both human capital, financial capital, so that our women in the continent can fully contribute to the growth of our continent, the growth of our GDP, and what was also said earlier, women, they transfer half of their income to their family, which is also another good news. But the bad news is that they are also the ones who have the lowest income. So imagine if we are able to increase the income that the women they can get on a regular basis, and making sure that they still transfer half of their income to the family, it means that the family will be able to prosper for our children, for our grandchildren, and for the community. So the African Guarantee Fund is committed to continue working with the financial institution to support women entrepreneurs through the Afawa Guarantee for Growth program. In addition, through ADF capacity building, we provide tailored technical assistance to the banks, to the financial institution, to develop their women SME lending portfolio. In the same time, we are trying to organize as much as possible training to support women SMEs. And this is what will happen here today during the two-day workshop that we will have, that will start tomorrow. So we'll have today's workshop on Wednesday and Thursday. So our objective is to provide solutions to bridge the 42 million gender financing gap in Africa. Ladies and gentlemen, as we continue with this journey of supporting women SME in Africa and in Ghana, we are very optimistic that the impact will be significant and will stimulate the growth in the economy. In conclusion, I would like to thank the African Development Bank, our shareholders, for their confidence and the partnership in the implementation of the Afawa Guarantee for Growth. We are looking forward to significantly increase our presence here, and we look forward to partnering with the banks, the financial institutions in Ghana to enable them to provide the much-needed financing to women SMEs. We also look forward to working with the government of Ghana to develop specific programs and products to support women SMEs so that all the bad news that I did mention earlier, we transform that into good news. Thank you very much for coming here today. We are honored of your presence, and I wish you a very good Afawa Finance series. Thank you.
Thank you very much, Jules Ngankam, Group Chief Executive Officer of the African Guarantee Fund. Please put your hands together for him one more time. So I mentioned early on that we've got representatives from the Ambassador of France to Ghana as well as the Kingdom of the Netherlands. Let's take some brief remarks, first of all, from a representative of the Ambassador of France to Ghana. Please put your hands together for him.
Madame Ado Awadzi, Second Deputy Governor of the Bank of Ghana, Madame Jerusalem Fasika, Country Manager for Ghana and for African Development Bank, ladies and gentlemen. It's a great pleasure for me to be here today representing Jules Armand Anyambosu, the French ambassador to Ghana. And I would like to thank the African Development Bank for inviting France to participate in this session of the Afawa Finance Series in Ghana. I commend the organization of this high-level event in order to address together all the challenges that women entrepreneurs face to access credits and to find concrete solutions to support the development of their business. First, I would like to say a few words about France's commitment for gender equality and then about our support to the Afawa program. Following the example of a few like-minded countries, France has adopted a feminist foreign diplomacy in 2019, making gender equality a key priority for France, both at the domestic level and at the international level. Our feminist diplomacy is implemented through our international strategy for gender equality 2018-2022, which adopts for the first time a gender mainstreaming approach to all components of French foreign policy, including both external and internal perspectives. Our feminist diplomacy is also characterized by a human rights approach within all our action and with the launch and implementation of strong and ambitious actions both at multilateral and bilateral levels. Since 2019, France took different measures to translate its commitments into actions, and I would like to mention a few of these initiatives very quickly that are implemented in partnership with civil society actors. First, the President Emmanuel Macron also launched a support fund for feminist organizations of the Global South. The support fund mobilizes 120 million euros over 3 years to fund the activities of feminist movement around the world, especially in low-income countries. It targets organizations of local civil society working to promote gender equality and the rights of women and girls and support both their activities and their structural costs. This fund has been renewed last year, and we will continue to work closely with civil society in the coming year on gender equality. As you all know, France has co-organized with Mexico and UN Women the Generation Equality Forum last year in Paris. 40 billion have been announced at the forum to enhance gender equality in the next 5 years. It is a historical commitment, and we need to, first, deliver on this commitment and also to call other countries to join and take strong commitments on gender equality too. During the France G7 presidency, we also supported 2 key initiatives. The Global Survivors Fund, led by the 2018 Peace Nobel Prize winner, Dr. Mukwege and Nadia Murad. France supported politically and financially the creation of the fund and continue to do so. And the Afawa initiative, implemented by the African Development Bank and the African Guarantee Fund. So that's why France is very proud to support politically and financially the Afawa initiative, which aims to unlock almost $5 billion to support women entrepreneurs in the continent. France commends the way the Afawa initiative works closely with financial institutions, regulatory stakeholders, and women entrepreneurs to ensure that financial services will be designed to specifically answer women entrepreneurs' needs. The ambition of the Afawa program to enable women entrepreneurs to develop their businesses. The Afawa initiative is now implemented in more than 23 countries of the continent and already supported hundreds of women entrepreneurs, including in Ghana. France is supporting the initiative through different channels: the technical assistance part, the risk-sharing mechanism part, and the equity part, and we will continue to support the initiative for the next year. And I would like to highlight notably the long-standing AfD, French Development Bank, and Proparco role and actions in their deep supportive role to help particularly the African Guarantee Fund in order to extend Afawa initiative. AfD, the French Development Bank, is as well open to support all women committed in innovative projects in Ghana. We really hope that this session of the Afawa Finance Series here in Ghana will be a strategic moment to get new commitments from all the stakeholders to facilitate women's access to entrepreneurship. Women's economic empowerment and women entrepreneurship are key components of gender equality, and all should be mobilized on this very important issue. Thank you for your attention, ladies and gentlemen, and I wish you a very, very fruitful Afawa Finance Series. Thank you.
Ladies and gentlemen, before we hear from our keynote speaker, please join me welcome the representative of the Kingdom of Netherlands to Ghana. Please put your hands together for her.
All protocol observed, dignitaries, ladies and gentlemen, good morning. As I sat there, I was wondering how best can I represent my ambassador in a way that will best reflect his thoughts this morning. Ambassador Miron Aveiro could not make it this morning for us to this meeting because of certain urgent matters, but I'm here to speak on his behalf. As a young African woman sitting here listening to everything being said, I was thinking of what would be his thoughts. The Netherlands is very honored and proud to be part of an initiative like Afawa that is seeking to bridge the financing gap here in Africa. The Netherlands continues to remain committed to support innovative solutions to local challenges which contribute to the UN Sustainable Development Goals by partnering with various stakeholders to support and strengthen local entrepreneurial ecosystems. One of the key strategies of the embassy here in Ghana for the coming years is to look at agriculture. And the two subsectors that the embassy is looking at is, horticulture and cocoa, sorry for that. And within those strategies, we're looking at private sector development, and women form a key and focal point within that strategy. And so the embassy here in Ghana is looking and working with all key stakeholders to continue to support access to finance, capacity building to ensure that agriculture, while supporting women SMEs in Africa and Ghana, is successful. There's a famous African proverb which says that if you want to go fast, go alone. If you want to go far, go together. And that is why for the Netherlands, we are not seeking to go fast by ourselves. We do want to go far, and sustainability is a key thing in that whole equation. So we want to continue to collaborate with our other development partners, with all key stakeholders, with government, to ensure that not only that is there an enabling environment, because one thing about access to finance is that it's one thing to give access to finance, it's a different thing to have an enabling environment for the finance to grow. And so for us, we have a round table that we are inviting everyone to say, how do we work together? How do we collaborate to ensure that all the efforts of the African Development Bank, the Afawa project, is successful in supporting women financing in Africa and Ghana. So here we call on CSOs, NGOs, and everybody who is joined here passionate about seeing change to work with us to see this happen. African women are pretty much the incubators and the carriers of Africa's next agenda for development and growth. And supporting them means supporting the next generations to come. I was thinking, as a young African woman, being at home and realizing that whenever you were worried that food was getting finished or supplies were getting finished, some way, somehow, your mom will have something packed in a story somewhere and will show up and say, guess what, it's not finished. And would always be panicking because maybe our father will say, the tea roll is finished, the soap is finished. And this woman will always find some magical way to show up with extra soap. And we're thinking, did you hide soap somewhere? What was going on? And I think that it's just to remind us that when you put things in the hands of women, you know that you are preserving and there'll be proper administration of those things. And so, yeah, thank you. So I don't want to speak too much, but knowing that when we empower African women, African businesses, we are preserving the goal to have sustainable development. And that is one of the key strategies of the Netherlands Embassy to see sustainability with all our projects here in Ghana and across the continent. We have the Orange Corners program, for example, that has been running to support young businesses, young SMEs. But one of the key strategies that we have had is to look at how we can ensure equality in these programs by supporting more women SMEs. For the past few years, since 2019, we have been in 4 regions. And this year, we plan to expand. The 4 regions, we've been in Accra, Tamale, Ho, and Kumasi, with Takrady also, so that's 5 actually. This year, we plan to expand into other regions, supporting SMEs, still having women at the center. So not to speak too much, I want to leave you with a very interesting quote, which represents what the Dutch stand for, what the Netherlands Embassy stands for, what my ambassador stands for. It says, "It is amazing what you can achieve or accomplish if you do not care who gets the credit." This is a quote by Harry S. Truman. For us, we do not care who gets the credit. We are all owners and partakers in Africa's development and growth, because if Africa wins, the rest of the world wins. And so for us as an embassy, as the Netherlands, we are part of this journey to say that it doesn't matter who pushes the agenda, who puts in more, who supports. It's not about who gets the credit. The biggest thing is, at the end of the day, are women empowered? Is Africa developing? Well, that is true success to us. Thank you very much.
Ladies and gentlemen, our next speaker is a legal governance and international finance professional with over 25 years of professional experience working in various capacities in Ghana and internationally. Her key areas of specialization include financial sector development and regulation, financial crisis management, public financial management, corporate governance, and sustainable economic development. She was appointed as second deputy governor of the Bank of Ghana in February 2018. She is a member of the bank's board of directors and a member of the monetary policy committee. She represents the bank on a number of public boards, including the boards of the National Pensions Regulatory Authority and the Securities and Exchange Commission. Before her appointment as deputy governor, she was senior counsel of the IMF's legal department. She was a key member of the IMF's financial sector stability assessment teams for G20 countries and advised on financial sector reforms and public financial management reforms in other countries in the context of the IMF's surveillance, lending, and technical assistance activities. Ladies and gentlemen, she holds an LLM degree with distinction from the Georgetown University Law Center, an MBA Finance, and an LLB degree from the University of Ghana. Our guest speaker is Mrs. Elsie Ado Awaji. Please put your hands together for her.
Thank you, Mr. MC Pakosi. Distinguished representatives, Ms. Jerusalem Fasika, Country Manager for Ghana, African Development Bank, and other officials of the AfDB from the headquarters, as well as Ghana, Esther and your team from Afawa, Monsieur Jules Ngankam, Group Chief Executive Officer of the African Guarantee Fund, representatives of the Ministries for Finance and Gender, Children and Social Protection, distinguished representatives from the Embassy of France, as well as the Embassy of the Netherlands, Mr. John Ewa, CEO of the Ghana Association of Banks, CEOs and senior officials of banks and other financial institutions, representatives of other corporate institutions, so on and so forth, invited guests, ladies and gentlemen. I am so happy to be here this morning representing Governor Ernest Addison, who is unable to be here because of an equally important national assignment. But at the Bank of Ghana, we find this event very important and critical. As we come here today to launch the Affirmative Finance Action for Women in Africa, Afawa's Finance Series. We understand that this is a 3-day event aimed at introducing to stakeholders in Ghana key interventions to promote gender-inclusive finance in Africa. We congratulate the African Development Bank Group, the African Guarantee Fund, and the Ghana Association of Banks for their successful collaboration, which has led to today's launch event, as well as the workshop that is expected over the next 2 days. Distinguished ladies and gentlemen, this occasion provides a very unique platform to discuss pertinent issues regarding access to finance for women entrepreneurs in Africa, which is a key socioeconomic challenge in these times. And as I speak for Governor Addison, don't be surprised that I come across in my own voice as well, because as many of you know, this is an area that is extremely important for me. I applaud the efforts of the African Development Bank to promote more access to finance for women-owned businesses through a number of interventions, including the Afawa initiative that seeks to close the $42 billion access to finance gap for women-empowered businesses in Africa over the next 5 to 6 years by working with partner financial institutions and through innovative financing instruments to provide training and capacity building, policy dialogue to support appropriate legal and regulatory reforms, and funding, among other things. I also note that the AfDB's risk-sharing agreement with the African Guarantee Fund since 2021 seeks to unlock some $2 billion in financing for women-owned and women-targeted SMEs in Africa. This facility is in turn supported by a $25 million technical assistance grant to enhance the capacity of financial institutions in Africa to better address the needs of women-owned and women-targeted SMEs. Ladies and gentlemen, a lot has taken place around the world since 2020 when the COVID-19 pandemic started. The global economy continues to reel under the lingering effects of that pandemic, as well as the war in Ukraine more recently. Global growth has remained moderated and in fact has slowed down considerably having come under additional shocks, including elevated geopolitical tensions with spillovers on the commodities market and consequential inflationary pressures. Inflation, as you know, has spiked above targets in advanced economies as well as in emerging and developing economies, resulting in monetary policy tightening by central banks around the world. This, in turn, has meant that global financing conditions have become significantly tightened, especially for emerging and developing economies, in the midst of portfolio reversals and rising interest rates in the US and a strong US dollar. In Africa, such adverse shocks have constrained access to finance, not only for governments, but also for firms, particularly SMEs, majority of whom tend to be owned and led by women. Access to finance for all economic actors, therefore, remains a key policy challenge in Africa, particularly for women and the youth. And policymakers continue to explore new interventions to address the existing gaps. Indeed, the World Bank estimates that between 2011 and 2021, about 250 million individuals in sub-Saharan Africa gained access to formal financial services through mobile money and other fintech-led innovations. Against this background, 11 countries in sub-Saharan Africa are now noted to have a greater share of adults with mobile money accounts, even though they may not have formal financial institution accounts. As a result of interoperable payment systems in many of these countries, mobile money accounts now operate as bank accounts and are able to access a full range of financial services. The spread of mobile money has undeniably created opportunities to better serve the vulnerable and financially excluded segments of society, particularly women-owned businesses. Ladies and gentlemen, notwithstanding the progress that is being made in promoting inclusive finance in sub-Saharan Africa, the gender gap in finance is still entrenched. The World Bank's Global Financial Inclusion Report of 2021 indicated that 61% of the adult population of males had access to finance, whereas only 49% of females in sub-Saharan Africa had access to finance. Similarly, the Global Findex Report of 2021 noted that the global gender gap in access to financial services had declined from 9%, where it had become entrenched from 2011, to 6% in 2021, meaning that while some progress had been made in access to finance for women, about 745 million women in the developing world still lacked access to financial services. The story for sub-Saharan Africa is even more dire. While the global average is now 6% in terms of the gender gap in access to finance, the gap for sub-Saharan Africa as of 2021 is 12%, and the gap for Ghana, as reported by the World Bank for the same period, is 11%. So the gap for Ghana since 2011 had been 9%, the gender gap in access in finance. In 2021, it showed that the gap had even widened further. Not because women were not getting access to finance, but more men were getting access to finance faster than women, and therefore the gap had widened. Despite the critical role of women in Africa's economic development, access to finance has remained a major constraint for their businesses, with an estimated $42 billion shortfall, as estimated by the AfDB across all value chains. Women entrepreneurs encounter various obstacles when accessing finance, whether they're in the informal sector and lack access to very basic micro lending, microinsurance, or other such financial institutions, or whether they're in the formal sector and are operating in the small, medium sized bracket of businesses, you see constraints across all these types of businesses and across all value chains. This, unfortunately, translates into constrained overall economic growth and resilience and lost opportunities for all. Indeed, it is well established by existing literature that improving women's access to finance positively impacts consumption levels across the nation, increases economic growth and socioeconomic development, promotes financial stability because women are known to be better borrowers and responsible borrowers, and improves overall resilience of economies. Broadly speaking, therefore, gender-inclusive finance serves as a catalyst for rapid, sustainable, and resilient economic growth and socioeconomic development. As someone said here in the earlier speeches, access to finance for women isn't just a good thing, it also makes business sense, and I strongly believe that. The market for finance for women-empowered businesses in Africa remains untapped as far as we are concerned at the Bank of Ghana, and holds significant promise for financial institutions and governments to tap into. Ghana's efforts in this regard have been noteworthy, although much remains to be done. The Government of Ghana's National Financial Inclusion and Development Strategy that started from 2017 through 2023 set out to increase access to finance for all, especially women, as a part of a comprehensive strategy to underpin inclusive macroeconomic growth and development. It is very encouraging to note that the World Bank's Findex report of 2021 revealed that access to finance for women was improving, although, like I said before, the gap had widened. Government interventions such as over the years providing, and especially in the pandemic, providing credit lines to SMEs through the Ghana Enterprises Agency, formerly known as the NBSSI, the Ghana Women's Fund, and other interventions have provided and continue to provide a lifeline to women-empowered businesses. In addition to provide for the Bank of Ghana, in addition to providing the enabling environment to promote financial stability, we are fully committed to promoting inclusive finance and gender-inclusive finance more particularly as a catalyst to promoting inclusive macroeconomic growth. As a member of the Alliance for Financial Inclusion, the Bank of Ghana has made strong commitments under the General Action Plan on Gender-Inclusive Finance to advance gender-inclusive finance with emphasis on promoting women's access, usage, and quality of financial services and products. Indeed, the Bank of Ghana's Sustainable Banking Principles, which it launched in conjunction with the Association of the Ghana Association of Banks in 2019, sets out a set of 7 ESG-related principles which enjoins banks to, among other things, promote financial inclusion and specifically gender equity in their internal operations as well as in their lending operations to their clients. Therefore, we fully expect banks to take on gender-inclusive finance very seriously. Banks have started reporting to the Bank of Ghana on a quarterly basis the extent to which they are complying with these principles, and we expect to see more compliance going forward. And indeed, it is quite important for us to note that under the Afawa initiative, the AfDB proposes to support the banks in Ghana with training, as well as with lines of financing that would help them support women-owned businesses. So we really encourage the banks to move away from ticking the boxes on the sustainable banking principles and to actually mainstream gender-inclusive finance across board in your operations. The Bank of Ghana has implemented a new online reporting and analytics supervisory tool by which all of our regulated financial institutions submit their prudential returns to us on a sex disaggregated basis. This means that whether the banks or the savings and loans companies or the microfinance companies or rural and community banks or the leasing companies are reporting to us monthly in terms of what products they have designed and rolled out, and how much deposits they have raised, how much loans they have given. All of those reports every month would now tell us on a sex disaggregated basis how much of this have gone to women and how much of this have gone to men. And even for businesses, how much of these have gone to women-owned businesses. We believe that this is key because data is often the missing piece in our discussions and in our policy formulation and implementation efforts. And it's important that we have the right kind of data to help to calibrate the policies, regulations, and the products and services that are needed to really make an impact in terms of gender-inclusive finance. We continue to strengthen the critical credit market infrastructure in Ghana, such as the credit bureau system and the collateral registry, to help de-risk lending to MSMEs, particularly women-owned businesses. Our collateral registry, for example, allows any borrower to be able to go to a bank or other financial institutions, borrow on the back of collateral that is not immovable. So any movable asset can be used as collateral and registered in the collateral registry, which provides transparency and more certainty for creditors and helps to promote more lending, particularly for women who, as we heard earlier on in one of the speeches, tend not to have too much of landed property. Ladies and gentlemen, let me emphasize that the financial sector has an important role to play in advancing access to finance for women-empowered businesses. Our regulatory and policy environment will continue to support the rollout of innovative financial services, whether traditional financial services or technologically based or, if you will, high-tech based financial services, which now have become mainstream, particularly for the informal sector, so that whether it's a market woman, whether it's a farmer, with the use of a mobile phone, they can continue to get access to a full suite of financial services. And indeed, that these financial services are also captured in the credit bureau system so that they can build up a credit history that allows them to borrow more, and then as they scale up their businesses, can then access higher amounts of loans going forward in a way that is also safe and prudent for the credit institutions to continue to extend. So ladies and gentlemen, we will continue to do everything we can as a central bank and regulator of the financial system and the banking system to support gender-inclusive finance, as I said before, so that we can promote macroeconomic stability and growth and development that is broad-based and inclusive and more resilient. This partnership that we're launching today between Afawa, the African Guarantee Fund, the Ghana Association of Banks, is therefore very timely and urgent, and we believe that it would go a long way in helping our economy recover from the current macroeconomic challenges it faces, and indeed make it even more resilient going forward. I dare say that this initiative holds great potential to equip women-owned businesses so that they can continue to spearhead the development of Ghana's economy and the regional market, the single African market that we're all working towards under the framework of the African Continental Free Trade Agreement. I therefore call on all stakeholders to get on board to support this initiative for our common good. The Bank of Ghana stands ready to continue to lend its support to ensure the realization of the objectives of this partnership. Thank you all once again for having me here, and I wish us all fruitful deliberations over the next few days.
Thank you very much, Mrs. Elsie Ado Awaji. Please put your hands together for her one more time. We're almost about wrapping up the opening session of this program. We've got panel discussions later in the day. A few housekeeping notes before we take our closing remarks. Just to remind you that quite a number of you were given this cheat. It's for lunch. The venue here is Shays George. That's been changed. And so all you've got to do, for those of you who have this card, is to just walk up straight to the third floor. There are ushers there to direct you to exactly where to go. Our specially invited guest in front, you will be ushered to a different place, so kindly take note. The media is also informed that there's going to be a press briefing that's supposed to be starting anytime soon. So kindly move to the press room. Kindly move to the press room. We'll also have some photo sessions, and the opening ceremony speakers will be part of this photo session. They'll be joined by the CEOs and the managing directors of banks that are represented here, and then of course would have the AGF as well as AfDB management joining in that photo session. Ladies and gentlemen, join me, welcome our final speaker to do the closing remark. We've got a representative from the Gender Ministry. Ladies and gentlemen, let's welcome Faustina Echampon. She's Director of the Department of Gender. Please put your hands together for her.
The second Deputy Governor, Bank of Ghana, the Country Manager, African Development Bank, the Group Chief Executive, African Guarantee Fund, the President, Ghana Association of Banks, donors, representatives here, representatives of financial institutions, esteemed media, distinguished ladies and gentlemen, good morning. I bring you warm greetings from the Honorable Minister, Hajia Lariba Abudu, who could not attend this all-important program due to her engagement in another equally important national assignment. She has therefore asked me to express her sincere apology to you. And so on behalf of the Honorable Minister, I read these remarks. It is indeed a great honor for me to be here today to deliver the closing address on this occasion to launch of the African Finance Action for Women in Africa. I believe this meeting is necessary in addressing a critical issue affecting our nation, that is, the gender finance gap. It is no secret that women in Ghana continue to face a significant financial disparity as compared to their male counterparts. Women-owned businesses, in particular, are disproportionately affected by this gap, limiting their potential for growth and economic independence. Distinguished ladies and gentlemen, closing this gender finance gap is crucial in achieving gender equality and inclusive economic development in Ghana. Research shows that when women have access to finance, they invest in their families, communities, and businesses, leading to increased productivity and sustainable economic growth. As a government, we recognize the importance of addressing this issue and have implemented several measures to support women's economic empowerment. One of such initiatives is the Ghana Women Entrepreneurship Summit, an annual event that brings together women entrepreneurs from across the country to connect, network, and access funding opportunities. This summit helps to address the challenges women face in doing business and to build the resilience of Ghana's female entrepreneurs. The platform has helped to further advance women's economic empowerment and created the largest database of women entrepreneurs in Ghana. Additionally, the government has partnered with several financial institutions to offer microfinance and small business loans to women entrepreneurs at affordable interest rates. Again, the government has established the Ghana Enterprises Agency, which is involved in the disbursement of low-cost funding to support small and medium-sized enterprises, including women-owned businesses. Ladies and gentlemen, during the COVID-19 pandemic, most women and youth, especially those in the informal sector, were affected because they typically earn less, have fewer savings, and hold less secure jobs, which made them more prone to economic shocks. In response to this, the government of Ghana, through the Social Investment Bank and in partnership with African Development Bank, initiated the post-COVID-19 skills development and productivity enhancement projects. And this project seeks to promote technical and entrepreneurship skills for job creation among women and the youth. It is worth noting that the gender finance gap is a significant challenge that requires collective action from all stakeholders gathered here. And this includes the government, financial institutions, and civil societies. As the minister in charge of gender, I encourage all of us to work together to address this gap and support women's financial and economic inclusion in order for women to become self-sufficient with a sustainable source of income, which would ensure a more inclusive and prosperous nation for all. Ladies and gentlemen, I would like to conclude by commending the African Development Bank for their continuous support in promoting gender equality and equity in Ghana through various interventions, particularly for putting up the Affirmative Finance Action for Women in Africa initiative. We say as a government, we do appreciate this greatly. It is my hope that the expectations of this event will be met, especially on equipping financial institutions with the general knowledge on better services for women. Let us all make use of the current innovations and creativity for women by using technology to advance skills for a better future and sustainable employment. I wish you all an insightful and successful event. And thank you for your attention. Thank you.
Thank you very much. Please put your hands together for her, representative of the Gender Minister. And so we're going to go for lunch now. I'm told there's a change in plan. We're going to go for lunch now. Just to remind you that the photo session is also going to happen now. And as I mentioned, the first photograph will be taken by the opening ceremony speakers, and they will be joined by the CEOs and managing directors of the banks, and then also we'll have a session with AGF and AfDB management. When we return for lunch, I don't know if we're going to be having the Genesis baseline study presentation. Is that going to happen? That will happen after lunch, right? That will happen after lunch. So it's time now for lunch, but remember we're going to do the photo session right about now. When we return, we will start off with our first panel discussion, and the first one is titled Understanding the Gender Financing Gap in Ghana, and that will be done by a representative from the AfDB. Actually, the AfDB country manager for Ghana will be part of that panel discussion and will be moderated by Winston Amwa. Ladies and gentlemen, thank you very much for joining us for the opening session of this program, and we hope we'll see you during the panel discussions. Thank you very much. All the speakers for the opening ceremony, if you could just kindly line up here for us. Thank you very much. Kindly indulge me. Please, you'd have to come to the top. Please climb up. Please climb up to the top. Kindly indulge me. Thank you. Yes, yes. Thank you very much. Yeah, that's okay. All right. Will they be joined by the CEOs and MDs of banks? If we have any of the CEOs and MDs of banks here represented, please join them up stage. Join. Okay, so there are 3 levels, and so if we could have a bit of the MDs and CEOs climb to the next one, and then AGF and AfDB management can also join them. AGF and AfDB management, you can also join. You join the opening ceremony speakers. Let's kindly utilize the next, yes, so that we don't have everybody cluttered at one place. So let's utilize the second step, yes. The second deputy governor is sandwiched between 2 tall men.
right.
I think that's better. So the hostesses would usher the opening ceremony speakers to the conference room. Thank you very much, all of you.
Tetema. 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 Oh mama. tetema. Oh, mama 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 tetema. Kisha kimempa. Kimempa. they smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh, mama, myself no do pass like this. So many things inside of my jeans. I slide down the beatings, the beatings. your ginger, give me kokoro. Mato de bijo. Tetema. 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 Oh mama. mama tetema. Whoa, 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 mama tetema. 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 Whoa, mama 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 tetema. Kisha kimempa. Kimempa. Kisha kimempa.
Clement, can you hear me? I'm hoping I'm audible now. My sincere apologies for the technical difficulties. I just want to check. Do I have the go ahead? I'm going to assume I have the go ahead to start presenting. Let me share my screen. Perfect, fantastic. Thank you so much, despite the technical difficulties, for giving me the chance to present to you this afternoon on the topic of the status of women entrepreneurs and their financial access in Africa. My name is Tasha Terblanche. I'm a principal at a company Analytics. Genesis is a global, we call ourselves a global African firm. We've worked in more than 19 countries, but 42 of those have been on the continent. We have offices in West Africa, in both Nigeria and Abidjan. I myself am based in Abidjan, just next door, and we know the Ghanaian market very well. Our FSS, our Financial Services Strategy team, has done more than 500 projects on the continent, and financial inclusion is a key focus in the work that we do. Just a very brief introduction to myself and Genesis. To set the scene, a couple of, I think, really important statistics around access to finance, which remains a significant challenge for SMEs globally, and even more so for women-run and women-owned SMEs. Only 29% of formal SMEs across sub-Saharan Africa have access to credit, with 49% of them citing access to finance as a barrier. There are a number of drivers of this constraint, a number of those that we'll discuss in more detail today: lack of collateral, information asymmetries, high cost to serve, shallow credit markets. As I said, this challenge is exacerbated further for women, and the AfDB estimates that the financing gap for SMEs, women SMEs alone, is $42 billion. Turning now to Ghana, if we consider the latest Findex 2021 data, we see that access has indeed improved for women. However, the gender gap is persistent, and unfortunately, it's growing. So while access has improved from 54% of women owning an account in 2017 to 63% today, we see that the gender gap in access has consistently increased since 2014 and currently stands at 11%. Sticking with the same data set, we see similarly that a gap exists for borrowing from financial institutions, with women being more likely to borrow from informal sources such as friends, family, and savings clubs. We also know that men tend to borrow more to start and run a business than women do. It's against this backdrop and these statistics that I've used to set the scene that the AfDB has commissioned Genesis to conduct a study of women entrepreneurs across 16 African markets. Our primary research included 60 interviews with 60 financial and government institutions, as well as a survey of more than 800 women-led businesses across the 16 markets, including Ghana. And so today, I have the privilege of speaking about the following 4 topics that our study focused on. The first is the opportunity to serve women SMEs in Ghana. The second topic I want to talk about is strategic considerations around serving women SMEs, so things that banks and DFI should think about. The third thing we'll touch on is barriers that women SMEs face in accessing finance. And finally, I'd like to just discuss some content around guarantees as a tool for development finance. So starting with the opportunity to serve women SMEs in Ghana. To understand this opportunity and the landscape more broadly, we looked at a number of issues. Firstly, the size of the addressable market. Secondly, the usage of and access to financial services amongst women SMEs. And I just want to check, am I still... the usage of and access to financial services amongst women SMEs, and finally, how women want to engage with financial institutions. Let's just first take a moment just to reflect on what we mean by addressable market. Addressable market in this context of the study refers to small and medium enterprises that are formalized and that would be recipients of loans from banks rather than non-bank financial institutions, rather than informal and rather than micro. The idea here is that these are the women-led enterprises who are expected to be reached through the guarantee program of Afawa and the African Guarantee Fund. So starting off with sizing the total MSME landscape in Ghana, we found that there are 1.8 million MSMEs, of which around 140,000 are formal, small, and medium. And what the graphic on this slide tells us is that the majority of MSMEs are informal, 84%. And then within the formal market, the majority tend to be micro, i.e. 51%, 52% of the formal market are micro enterprises. On the next slide, we've done this same exercise, but for the subsegment of women MSMEs. There are 670,000 women MSMEs in the Ghanaian market, of which 30,000 fall in the addressable market, i.e. small, medium, and formal. What we see on the graphic in this slide is that women SMEs tend to be even more informal, i.e. 89% of MSMEs are informal. And in the formal market, even more so, women tend to have micro enterprises. So 61% of the formal market being micro for women SMEs. Turning next, now that we understand the size of the market, turning next to the issue of women being severely underserved in these markets. we see that women in Ghana, 54% of women, do not have the credit that they need to run their businesses. Before the detail of this slide, I think something that's interesting to point out, and which is a caveat to those beginning scene setting statistics that I gave on from the Findex data, is that the Findex data masks some of the nuances of the market, in the sense that what we just saw 2 slides ago is that the overwhelming majority of the market tends to be micro and informal. And so it's very difficult when you look at a market-wide data set such as Findex to get a sense of the addressable market's behavior. So the formal, small, and medium segment, which we know to be a small sub-segment of women SMEs. And so to overcome this issue, what we did is we conducted a baseline survey of 800 women SMEs, 50 in each country, so 50 women SMEs in Ghana that we spoke to collect more granular data on the specific needs and characteristics of women SMEs. And some of those results I'll talk through in the presentation today. The first and most striking result, of course, is that even if you look at the sub-segment of small and medium formal enterprises, who you would typically believe would be able to access loans much better than micro and informal and the overall average of the sector, still 45% of respondents indicated that access to finance was a significant obstacle they faced in growing their business. Turning now to strategic considerations around serving women SMEs. So the idea is we now have a sense of the size of the market, as well as the size of the opportunity to serve women, the number of women that find access to finance challenging. Now we want to talk about strategic considerations around serving these women. So what we learned from our research is that women SMEs care about targeted products, but also representation of women in staff and marketing. When asked about what they're looking for in a bank, of course, women care about interest rates, they care about fees, but they also care about targeted offerings and customer service. Women SMEs in our survey described their ideal bank as one that has a focus on women SMEs, provides training and skills development, one that provides credit when they need it, and offers a quick and easy credit application process. Standing still at one of these topics, i.e. providing training and skills development, in the next slide, we delve into the survey finding around women indicating that non-financial services is important. In Ghana, in particular, expansion strategy support around labor laws, customer relations, as well as accounting and budgeting. Only 31% of the addressable market that we surveyed said that they had previously attended a training program targeting their businesses. And you can see in the graphic below the priority topics that women wanted training on. The role of non-financial services, in this case training programs, for example, in supporting women SMEs should not be underestimated, as it's a powerful tool to serve SMEs in a holistic manner. Across the continent, banks have started to appreciate this, and they are serving customers, women SMEs and SMEs more generally, with a customer value proposition approach rather than a product-led approach. This involves banks offering critical non-financial services such as information, education, networking opportunities, and the like as part of a bundle of products and services. The role of non-financial services in supporting SMEs is important, and when banks choose to opt for this value proposition-led approach, there's a number of things that banks need to consider, and it requires a very clear strategy. In order to successfully offer non-financial services, financial institutions must consider, first of all, strategic fit. The appropriate non-financial services will depend on which SME segment the bank prioritizes. As we saw earlier, women have very particular needs in the Ghanaian market, and it would need to be assessed whether this is the appropriate strategic fit with the bank. The second consideration for the bank is around profitability. The bank needs to have a clear understanding of the cost of different non-financial services strategies and how this is recovered through better growth, better loan performance, or lower churn on customers. Finally, banks need to consider relevance. Financial institutions should invest in research to develop a good understanding of the support required in their market segment and the most appropriate channels for delivery of this support before launching a suite of non-financial services. And our research on the needs of women is a good starting point for developing such a holistic package to serve women SMEs in the Ghanaian market. The third topic that I want to talk to today is the barriers that women SMEs face in accessing finance. In our research, we analyzed 5 key barriers to accessing finance with a focus on those that are more challenging for women SMEs, i.e. collateral, appetite from banks, and financial literacy. On the topic of lack of collateral, we know that this is an issue across the continent for SMEs, but again, this is particularly relevant to women SMEs. One of the main reasons for high collateral requirements, as we all know, is of course the lack of credit information. When limited credit information exists and credit bureau coverage is low, such as in the case of Ghana, where only 32% of the adult population is covered by the credit bureau, banks cannot properly assess risk, and hence collateral acts as a security for banks. However, women SMEs struggle to provide collateral given the preference of lenders for fixed assets. Among the addressable markets surveyed by Genesis in Ghana, 33% of women said that they did not have access to land to use as collateral. Furthermore, it was often found in our research that there is limited appetite amongst banks to lend to women SMEs. Banks tend to perceive women to be riskier customers and find it more expensive to serve them. Women SMEs are additionally, given that women SMEs request lower amounts of credit and are often deemed less profitable, they represent higher transaction costs, which are then often passed through in the form of higher interest rates and higher fees. In stakeholder consultations, some banks also noted that the cost of training staff that serve these women has a higher cost on average. There's also a limited number of banks offering dedicated products and services for women, which is something we found through our research. Stakeholder engagements here again indicated that for some banks, the reason that they don't have a dedicated offering is that they don't believe women SMEs have a specific or different need, but also that they don't have enough resources to develop and implement this, which points to the importance of technical assistance to banks to support product development and gender intelligence, for example, something we'll touch on a little bit later. The final topic I want to talk to that came out of our research is guarantees as a tool for development finance. And here what we tried to do with a mix of primary research in the 60 interviews that we conducted, as well as a literature review, we tried to distill a set of design principles for successful guarantees. And what we hope this would provide Afawa and the African Guarantee Fund is considerations that as the rollout continues, that's useful for the fund and provides almost a benchmark or a best practice of sorts. And so from our research, we know that guarantees can provide a viable way to improve SMEs' access to finance if it's underpinned by appropriate design principles. So there are 3 categories of call it design principles. The first is around strategic considerations, which are foundational in terms of determining the success of a guarantee program. And here we think there are 3 things that are important to consider. First of all, the country context. And here what we saw in the markets, what was interesting is when you have a very high interest rate environment, concessional funding is often much more attractive to a bank. Whereas if you have a market where non-performing loans for the sector is particularly high, de-risking is more attractive to banks, and a guarantee program by itself can make a difference. The second thing to consider is strategic alignment of the financial institution, and third, the type of guarantee, whether it be an individual or a portfolio guarantee. I'll just say a little bit more about the second point on strategic alignment of the financial institution. it's very important that women's needs should underpin the bank's strategies with regard to women SMEs. Through our analysis, we've identified some key characteristics that should be considered when selecting lending partners, and what we believe makes for a successful guarantee recipient that will unlock funding to women SMEs. First of all, a strategic focus on women SMEs. There needs to be strategic intent, and importantly, there needs to be buy-in from the top. Secondly, targeted offerings. As we saw, this is something that women expect or appreciate from their ideal bank. And so there needs to again be intentionality around product design from the side of the bank. Thirdly, the bank needs to have credit processes that can actually reflect the impact of a guarantee. And so the bank needs to have the right credit capabilities to factor in a guarantee when assessing the risk of a potential customer. Finally, it's very important that the institution that is a recipient of a guarantee collects sex disaggregated data and implements monitoring processes of the same. This enables a bank to better understand the risk profiles, the needs, and the behaviors of women SMEs to inform its strategy and offering. The second group of design considerations is around guarantee design. And here we're talking about the features of the specific guarantee product. So first of all, in instrument features, and secondly, application process. I'll make a couple of very quick comments just from our stakeholder consultations across the 16 markets. We saw that typically if banks wanted to consider a guarantee program to unlock funding to women, they would want relatively high levels of risk sharing to address the cost of funding to allow banks to issue more loans. They wouldn't want the criterion to be too narrow, and it should be informed by the local context. The guarantee should be set up as a fund and used as security for the bank if there is a default, and there should be an efficient claims process, as well as the guarantee should be confidential, as banks identified that as being more impactful than a publicized guarantee program. The final set of design considerations is around guarantee implementation. And here the question is, how do we ensure the success and sustainability of a guarantee program? A guarantee product. And the first point here is around technical assistance for the financial institution. I'll say a little bit more about that. And then secondly, complementary products and support required. And then thirdly, an effective disbursement process. On the topic of technical assistance, it's important to support both product development at financial institutions as well as supporting soft skills and gender intelligence development. This is typically the role that technical assistance can play to support the successful rollout and sustainability of a guarantee to ensure that it does indeed unlock funding to women SMEs. That was the final topic of our research that I wanted to share with you today. So that brings us to the end of the presentation. I hope that it was interesting. If you have any questions, please don't hesitate to reach out to us. I know we don't have a Q&A section today as I hand over to the esteemed guests for the panel, but please don't hesitate should anyone have any questions on the research that we conducted for Ghana and more broadly. I'll stop sharing my screen.
Together for Tasha for that insightful presentation. We'll just go straight to our first panel discussion. Ladies and gentlemen, I'm going to invite the speakers for the first panel discussion. They are going to be talking about understanding the gender financing gap here in Ghana. Ladies and gentlemen, join me. Welcome the who is Director of Payment Systems at the Department of the Bank of Ghana. Please put your hands together for him as well. This very first panel discussion is going to be moderated by my colleague Winston Amwa of Joy 99.7 FM. Winston, where are you? Please put your hands together for Winston.
Pakwesi. I think there's another speaker. Yes, so let's kindly welcome the CEO of the Ghana Association of Banks, John Ewa. And let me say thank you once again to, Parkwisi for doing us the honors and introducing us for this all-important conversation. Now, I recognize that we've had a bit of, issues with time. And so even though it's supposed to be 1 hour, I would try my best, make sure it's very, very, very interactive. However, it would be less than 1 hour. I am sure you would all agree with me on that, wouldn't you? Do you agree? No, if you don't agree, we can actually spend more than 1 hour. I'm sure we can do 1.5 hours and wouldn't have a problem, would we? Anyway, so let's start. Let's start the conversation. And let me say thanks to all of you, for joining us and making time to be here. And I'd like to start with you, Jerusalem, because we're talking about the Genesis report. We're talking about 30,000 women SMEs being formal. And out of the about 140,000 formal SMEs, you have only 30,000 of them being women. That is not a good figure. The question is, why is this the case?
Thank you very much, Winston. Hope you can hear me. Great, thank you. And welcome back. Hope you had a good lunch and a good break. So welcome back to the afternoon session. We're glad to have a number of you back in the room. So, okay, according to the World Economics, Ghana's informal economy accounts for 35.6% of its GDP, which is approximately about 65 million US dollar at purchasing power parity levels. Agriculture work dominates the informal sector in Ghana, which is about representing 75%. And similarly, women entrepreneurs are disproportionately self-employed in informal enterprises, increasing their vulnerability and reducing their access to financial and services, to finance and services. And there are, if you look at it, there are a number of barriers for the informal sector to be, why they are informal sector and also to remain in the informal sector. Number one, we have the social and cultural norms. If you look at the informal sector, particularly in this case, they are mainly dominated in the agriculture sector. Most of our sisters, mothers, daughters are they have a very big responsibility in the household. As a mom, they are looking after their kids. As a wife, they're looking after their husband or contributing to the household. As daughters, they are looking after their elderly moms and dads. They're looking after their siblings. They are helping out their parents. So when you look at it, they would have to contribute somehow by undertaking some kind of informal activities to contribute to the household income. So it is not like, they are informal, on design. It is just to address the challenges that they are facing every day. So the social aspect, the cultural aspect that puts pressure on them, they tend to be doing, the activities outside the home as a secondary thing. We've discussed about it this morning. We are, I say I have 2 kids. I said, my number one job is mother. I'm also a wife. I also work for ADB. Okay, so, we do a lot of things. I look after my mom. I look after my younger siblings. So we have a lot of responsibilities. So for our sisters that don't have, access to finance, who would provide access to, someone who doesn't have much? So, once we look at the social and the cultural norms, that's kind of, brings us to access. Is there access? Even if they are in the informal sector, will they be, are there institutions that will be providing them, credit? So that is also one area. And, again, collateral. What do they own? Do they own properties? I think maybe Ghana is, in a better position, but it's still access to properties, access to land. We've heard this morning the second Director General indicating that at least now, mobile properties can be also used as a collateral, which is a very good thing. So we talked about access to finance and access to collateral and access to information. What information do you have? And by the way, when we talk about information, also the level of education. Education is also, an impediment for us to, I mean, when I say us, I'm speaking, kind of like
sure,
being a voice of the informal sector, if you're not educated, people that are educated will be employed, probably, they'll get, that's why we are in this room. But, when you are not getting adequate education, yes, in the recent decades, we're seeing a lot of improvement in Ghana and in other countries. But, the largest room in the building is a room for improvement. So more needs to be in that aspect. So I've covered the importance of education, the importance of information, the importance of networking. Again, culturally, I mean, if you look at men, you have more social network to exchange views. But again, women or girls being very busy at a household level, the network or the information to get different opportunities is very limited. So that also kind of keeps, the women to graduate from the informal sector, to do better. Maybe let me stop here and then I will come back later.
I'll get back to you, but let me get to you, Patrick Lumumba. So I'm asking you the same question, but this time I'm just asking you your view on the Genesis report.
Thank you so much. I think the report is very critical, and it's basically a preamble to undertaking this particular initiative, especially in enhancing women financing in any particular country. It sets the landscape, identifying critically what the challenges are specifically, giving data, identifying what the gaps are within the financial institutions, so both the supply and demand ends. And this basically gives the banks and key stakeholders an opportunity to intervene, because within the women financing value chain, there are different players. We talk about this particular panel, of which I know there are policy regulators being at the macro level, but also at the financial institution level. What solutions can be provided so that some of these gaps are addressed. So it gives a good landscape to begin from. Policy levels, we have identified what issues there are. If you talk about 3% of women in Africa owning title deeds, then that becomes a challenge to policymakers within the different ministries. How can we facilitate our women folk to access titles? If you look at credit reference bureaus, how are they utilizing the information to enable the banks to appropriately assess the capacity of women SMEs to access financing? I know in most of the countries where CRBs are, it's mostly used negatively to prevent SMEs from accessing finance, but rather it should be used positively to assess capacity of SMEs to access financing. So all these are policy issues, from titling to effective use of CRB to enabling a digitalization environment, because we are talking about expensive, the high cost of enabling women to access financing, especially in far-flung areas. So how can a digitalization environment facilitate access to financing for women SMEs? So aspects of macro, but also aspects of opportunities for financial institutions to intervene. But also, more importantly, also for development financial institutions like AGF and some of our partners who are in the room. How can we mitigate and support the entire value chain? So it's a very comprehensive report, gives us a start on how to address aspects of Ghana in terms of accessing financing to women SMEs.
Great. So let me get to Dr. Medikut now. And so you've heard from Jerusalem, you've heard from Patrick talking about what some of the challenges are. It all boils down to access to credit. Why are we faced with that situation?
Yeah, thank you. First of all, let me thank AfDB and the Africa Guarantee Fund and the Ghana Association of Banks for organizing this very, very important program. If you look at the data, you could see that since 2011, I'm talking about the Ghanaian data, we try to narrow the gap between the men and the women in terms of access to finance. In 2017, the gap was 8%. However, as a result of the last year, 2021 data released, we have seen that access to finance for women is deteriorating. We've seen that the gap, the gender gap, is increasing. Now, the question is, why is it that we have seen a widening gap in access to finance to women, despite all the initiatives the government and the central bank have pursued to ensure that we promote access to finance to women? For example, if you take the digitalization agenda, the passage of the Payment System Services Act, we have seen that the problem technically is coming from the financial account side. If you disaggregate the data, you look at mobile money, you will see that women have more access to mobile money compared to the bank account. And the question is, why is it that we have seen increasing trend in access to mobile money by women compared to bank accounts? That just says that if you listen carefully to the presentation made by the genetics, you realize that Genesis, you realize that it talks about tailoring product to meet the specific needs of women. You realize that the same report, as you yourself has stated also stated that majority of the women are in the informal sector. And most of these women are mostly found in the rural communities, where some of our banks are finding it difficult to locate. So it means that we must find an infrastructure that provide that access to our women. And one of the surest way of that infrastructure is mobile money. And we have seen it in the data that mobile money is encouraging more women to come into the financial system to have access to finance through digital credit now being offered through partnership with fintech and the banks. So you see that women in the rural areas are now having access to digital credit in terms of mobile money compared to the bank-based product. Now, it just shows that if we want to change the narrative, we need to change our traditional way of providing credit to women. The reason is we have seen various factors that have limited access to finance. The report has talked about, which most of us here are already aware of those factors. I don't want to enumerate them. But we need to move away from the traditional way of getting to the women, trying to come out with products that suit their needs, that will help them to really promote their businesses. Because we have seen that various studies have shown in the literature that an increase in finance to women lead to job creation, lead to welfare improvement, lead to what? Growth. So we need to move away from the traditional methods of making finance available to women. And I think I will look at it from that point. That is one of the reasons why Ghana, we have still seen a widening gender gap despite all the initiatives that we have implemented to narrow the gap. I don't see that the surer ways of solving this problem is bank-based. The surest ways of solving this problem, which I agree with the presentation also, is especially in a high interest rate environment like ours. We need to come up with solutions that really meet the needs of women, like the guarantee fund that he's talking about. And this can be delivered through digital channels.
Well, talking about solutions that would meet the needs of women, and talking about the digital, we'll come to that shortly, because we know, and Johnny was here, not long ago we were having a conversation on Joy FM about You Start and what the banks were doing for young entrepreneurs. That's clearly a policy geared towards young entrepreneurs. What that means is that we can also have policies geared towards women entrepreneurs and women SMEs, isn't it?
Of course, yes. And I'm sure one of the speakers has already touched on it, or in the morning session. Even in Ghana here, you drill down in most of the banks, and you find that banks have targeted propositions. A few of them are very loud, talking about the approach they have towards dealing with access to finance to women-owned businesses or to women generally. Some banks have very fanciful ways of attracting women in that direction. But I like to also look at it from how, you hit the nail right on the head around why, upon all these things we have done, we've not seen the trajectory in the right direction. And I believe that we are taking our eyes off how the average woman entrepreneur sees risk and how they would like to access that risk. You would find that generally women business entrepreneurs are more risk averse than their male counterparts. So you need a lot more convincing for them to even avail themselves to credit when the bank is ready to lend. And it goes to the point of how we see our businesses, how our women entrepreneurs see scaling up their operations through financing. So you find that some very good businesses will be there, but they'll be operating at a certain level, and what takes it to the next level is the scaling. But the risk component of it, what if I take this loan and something happens and I lose my business? So we need to do a lot more of the education, a lot more of the advisory services, a lot more of this focused interaction with women groups, letting them know that it is possible to come to the bank, take money, and scale your operations. Generally, I have had the opportunity to work with at least 6 different banks at very high level, and I have not come across a bank that has in their credit policy that if the business owner is a woman, please heighten the risk parameters or tighten the risk parameters because women businesses are riskier. I see more of if you pick any bank and you ask how many credit applications have been received, of about 200 credit applications you receive, you find out about just a few, handful, will be coming through from women-owned businesses or women business entrepreneurs. So when you do that, what will be the outcome? If it is only 5 that apply out of 200, even if you do 90% approval for the 5, you are still far, far below how many of the men will be able to get the financing. So it's more of also opening up. And workshops such as this and what the banks do, like in Access Bank, in APSA, I think Standard Chartered, in EcoBank, they have these women-oriented products and programs where they put them in rooms, they talk to them about business, how to manage their finances, and also to open up the funding opportunities that are available. So it takes 2 to tango. Okay. It's a demand and supply, and if the demand is not there, the bank will not throw the money at you.
Yeah, but talking about no bank would say, don't lend money to women. There are also those who would say the banks themselves, they don't lend money to SMEs. And so, yes, some of these women, knowing that you don't lend monies to SMEs, would not even show up. They say, You like doing business with government. You go for treasury bills and not want to, and let me just put this. I mean, I was doing an assessment of 4 major banks in Ghana in 2021, and I realized that their investment in government securities was about 6.5 billion compared to some 600 million that he had given even in personal loans. You like doing business with government. So if that's the case, why would I want to come to you knowing very well what the response is going to be?
I'm sure now the terrain has been leveled. Of course, if you look at the risk environment, the terrain has been leveled.
How has the terrain been leveled? I'm just interested.
We're pointing to risk, and now you've seen that even the other side, there's a certain sense of risk.
Okay.
So we will see risk both ways. But the point I'm making is money is fungible. If there is no demand, there will be an avenue for the money, because as people put their money in the bank, there is a promised return, and the bank will also be looking at getting a return on their investment. But look at this. People compare the lending rates in Ghana to our sub-region and to other parts. We need to look at it in totality. Look at the non-performing loan rate in Ghana and compare to a place like Cote d'Ivoire. We are in the West Africa sub-region. We are doing like 3 times in multiples of the non-performing loan ratio in Ghana as there is in Cote d'Ivoire. So if Cote d'Ivoire, they are able to access loans at 15%, it's because the probability of default in Cote d'Ivoire is lower. So in Ghana, we have to also know our circumstance, the environment within which we are operating, and we price accordingly. In terrains where we've seen market fundamentals or market rates trending downwards, you find the lending rates also moving in tandem. So banks do not necessarily take delight in higher interest rate environment. Higher interest rate environment leads to higher interest burden, and it leads to higher probability of default. And that is not what we are looking for. We don't want to take money on the top line and then write everything off on the bottom line. So it's environmental, and all the things we are doing, the Ghana card, the business registration, and all that is geared towards improving the risk environment, and then banks will be able to lend safely. If we're able to lend safely, then the lending rate will come in line. So it's not a matter of where the rate is and whether banks are delighted to see that.
But looking at the level of non-performing loans, on a scale, it's better to do business with government, right?
No, I think I've answered that question.
No, I just want, you see, I'm going to ask a question after this, and that's why I'm asking you this. Because when you speak to Ghanaian businesses, even the bigger businesses, they tell you the challenges they have. I mean, we've set up the DBG to help these businesses. I mean, Ghanaian business have even complained about being able to compete in West Africa also because of the cost of credit. And so you are explaining that the level of non-performing loans increases the risk of wanting to lend to businesses, right?
Of course, yes.
Great. So that would take me to you, Dr. Amadiku, again, and look at how we can change that. Because it's looking like today, and I made the point today, if you want to give me a loan at 36%, really, I will think twice before I walk in there. I may need the money, but I ask myself, can I pay it? So I stay away. How do we ensure that we're able to lend also at a rate that is favorable to businesses?
Thank you. This is like an economics question, but I'll answer. In the first place, savings are very low in this part of our world. If you look at Ghana, the savings ratio is very low. The money we are talking about for the banks to lend, it is we Ghanaians who have to put the money at the bank so that they can intermediate and make it available to do that maturity transformation and make it available for our women to borrow. The second issue that is making our situation worse is also over the years we have been experiencing bouts of macro instability. In a situation whereby you have high inflationary environment, high interest rate, and I'm sure the presentation also talk about that. where there is a high inflation, high interest rate environment, you cannot say that you want to go through the traditional means of making credit available to the women. You must find concessionary schemes, guarantees that will encourage lending to our women. So the only way, I believe, as a country, we can overcome this is to ensure stable macro environment. And a stable macro environment comes from various fronts, and all stakeholders are involved. Not only Bank of Ghana, not only government. We, the citizens ourselves too, we are involved. Everybody is involved. We have to play our part. And in doing that, if we ensure that inflation is low, interest rates are low, like what my colleague was also talking about earlier on. In a low interest rate environment, all things being equal, you expect that the interest rate that banks are offering on their loans should be lower. But let's rather confront the issue, because most of these things I'm talking about are outside the control of most of us. In this environment, how can we promote access to finance to women? The first thing we need to do, first of all, is to get sex disaggregated data. And our central bank, since 2017, we have put in place measures to ensure that we collect sex disaggregated data. For example, we want to know the number of women who have applied for a loan. We want to know the number of women who have been given loans. We have to know the number of women who have rejected loans. And then also, we have encouraged the use of big data. Now, there are several variables you can use to evaluate someone's credit capability, not only the traditional norms of assessing credit worthiness. Now we have partnership coming from banks and fintech, and they purely use big data to offer micro digital credit to women SMEs. That is another approach that we have pursued. Another novelty that we introduced in 2019 was to promote the passage of the Payment System and Services Act. In this act, we have introduced the low-tiered KYC system, whereby people who didn't have a voice in the past, meaning people who didn't have access to the financial system, can be given access to the financial system by obtaining low KYC requirements so that they can have access to credit. Another thing that we did last year was to encourage Ghanaians to see the importance of identity. So since July 2021, we make it mandatory that for you to access financial services, you need Ghana card. Why this? The reason is most Ghanaians, especially women, when they go to access financial services, various requirements which are not uniform are asked of them. Bring your this, go and bring your husband this thing, your husband this thing. To eliminate all these things, we have standardized the KYC requirement, which is now only your Ghana card that will let you get access to finance, to eliminate discrimination and biases in credit delivery. Now, another key thing that we have also done as a central bank is to encourage schemes such as VSLA. John talked about it briefly, whereby we have identified some banks, like if you take, I don't want to mention any bank, as a central bank, I should be careful mentioning a bank. We have banks that have targeted schemes that the central bank have approved. We encourage these banks, they go to the villages, they offer tailored solutions to the banks, to the women, they put them in groups, village service and loan association groups, and they offer this credit to them. They go back to the villages to listen to their problem and try and come up with solutions. These are targeted solutions that the central bank has promoted, and we know banks that are promoting this, and we always encourage them through even the agency banking concept, which is enshrined in the Payment System and Services Act. So, yes, we have all the things we complain about, that we have high interest rate environment, we have high inflationary environment, but we still believe there are several other innovation schemes that we can bring in to make finance available to women SMEs so that they can promote the necessary growth we expect of them. Thank you.
Thank you very much, Dr. Mediku. Let me get to you, Patrick. And, you know, when we're all hit by COVID-19, one of the things we did in Ghana was the COVID-19 Alleviation Program Business Support Scheme, CAPBAS. And the whole idea was to ensure that we're able to, you know, assist a lot of MSMEs. The criterion at the time, or the criteria, were, first of all, you should be formalized. And for many of us, the expectation is that after going through this process, and we had at the time that we give, you know, we would focus more on women SMEs. We had over, last time I checked, about 300,000 or more gaining access from, to funds. So one would have expected ordinarily that when you're talking about, you know, women MSMEs, you would have a lot of them being formalized. That doesn't seem to be the case. The question is, how do we get women SMEs to get information around business regulation and understand and comply with regulatory regimes?
Thanks for the question. I think one thing we have to recognize is that to enable, to enhance access to financing, especially to a population that are disenfranchised, you know, as far as access to financing is concerned, is there need to be several fronts in terms of addressing that. General credit provision is not enough, and that's why emphasis is on blended financing. And blended financing, not necessarily sometimes, we overemphasize on credit and we leave savings. Sometimes it's a saving solution. So credit and savings need to be accompanied by technical assistance or capacity development. With that also, to mitigate against perceived risk, we find risk-sharing mechanisms like African Guarantee Fund coming on board. Because definitely banks, as you've rightfully said and emphasized to the Ghana Banks Association president, is that it's comfortable for banks to do business with the government. Sit back, plunge your money on T-bills and T-bonds, and wait to get your returns. So part of capacity development or technical assistance, like in AGF, we provide that support to financial institutions, but more so we also have a component that goes directly to SMEs. So in that process, we work with business development service providers, or with our partnership with AfDB Afawa. We call this people business enablers, consultants or consulting initiatives that go out, identify potential women SMEs, bring them together, and take them through the motions of, do you have simple business plans? How do you keep records? Do you need to register with the counties? How do you basically formalize? Because as we saw, a huge percent of SMEs on the Genesis survey report, only 11% of women SMEs are formalized. That by itself, the bank cannot touch you with a 10-foot stick. So it already disenfranchises them even more. So such initiative and our capacity development initiative, we work with partners that then bring these SMEs together and take them through the motions of formalizing and link them up with financial institutions to access financing. So blended finance is a very, very key component towards enabling these women's SMEs to get formalized and graduate from micro, small, and medium size.
Great. Let me get to you, Johnny, where you're talking earlier about some of the financial institutions, putting in place mechanisms. I think for all those who are gathered here, one of the things I would love to know is the opportunities that are available for women SMEs. Share some of them with us.
Yeah, I think what, as community of banks, through programs such as this, we should be doing is to move from where we are now, where we have desks, a women desk or a small desk in the corner somewhere dedicated to women transaction, one or two products, to mainstreaming women businesses as part of the core activities that as banks we participate in. As we've heard in the morning, access to finance to women businesses is not a CSR, it is business, because we have known that women business owners are more credit conscious, their credit history is even better than their male counterparts, and also the value and cascading and multiplier effect that they make in society is greater. And as banks, we always like to build. And it's only when the pie is bigger that if you take a little piece of it, you are still okay as a financial institution. So we have a duty, and that is why when we were approached as an association by Afawa, we did not renege at all. We just opened our doors and said, how can we do this together, organize this program, and through this, we can get our member banks to open up their doors and not just see women MSMEs as a small piece of the pie, but a greater piece of the pie. In the end, you leave the decision-making to individual banks to undertake. These are not things you can legislate as an association, but once it becomes mainstream, then if Bank A is driving value through that, you wouldn't have to tell Bank B that that is where the money is. You have to, so it's more or less working together to mainstream it. And one way of doing it is what we are doing today, using other financing tools that will encourage banks to take that initial step. Now, the risk is a bit mitigated through the guarantee. And I like what the research said, that as much as we want to emphasize on the guarantees and the like, as banks, we want that as a back pocket. We want to be able to sell the product as it is, because history tells us that when participants or beneficiaries are aware of a certain secondary guarantee scheme, then the probability that they will not give it their all to pay back is also heightened. So we need to balance the act properly, but this program, particularly this through the Africa Guarantee Fund and also through AfDB, I think it is a step in the right direction. And as banks, we are not ending it here. We are part of the training program for tomorrow and the next day. And it's not going to end there. From the association, we will also begin whipping up interest to enable member banks participate fully. Because it's the business of banking. And as I said, it's not charity.
Thank you very much, Johnny. Of course, we know it's no charity. We need to be wrapping up, but let me come to you, Jerusalem, and find out from you what you think governments can do to facilitate the transition of many of these, women businesses that are within the informal sector to the formal sector.
Thank you very much. I think the points that have been raised here is exactly what the government is doing or should be doing more, the development partners and the private sector. For me, providing Afawa or financing to women, it's not a favor that we are doing for women. It is, it's actually, these are untapped resources. We also understand, the bottom line of the financing institution is like, we have to be frank, there is a bottom line. You don't want to run, financial services, so you will be closing your office, the next day. But, despite that, I think we all agree, 49% of women in Ghana, 49% of the population are women. We've informed earlier that there is, 54% untapped market. So it is a business which we should, look into. And as rightly indicated, who are your clients? Who are our clients? Do we know them? Do we have enough information? That's where the information of, having quality data disaggregated by gender, even though it is a data that's disaggregated by gender, our service provision or the service provision that we're doing, has to be, gender neutral. We have to be, by the way, as much as we are also, we would want to bring the women, but we should not also forget, our young boys, our children, our sons, our fathers and brothers, yeah? So it is important. I think the government is already doing a lot. We've just been informed this morning and as well as this afternoon. But at the same time, we are also looking at the gap. That's when also, with the data that we have, to do more analysis and then, what needs to be done accordingly. Policies, it's good to have policies, regulations and strategies, but also implementing them is also, will take us where we want to, where we want to go. So, these policies have to be prioritized, they have to be sequenced, and they have to be financed. So that's where we're coming. And for the African Development Bank, by the way, addressing the SME issues, I liked what you said. It should not be a standalone. It should be mainstreamed. It should be integrated. We do have agriculture projects I mentioned in my speech this morning, which support SMEs, in the northern Ghana. Supporting, young university graduate women to be in poultry businesses and others. So, the support that we are providing to, to DBG. So it is not a standalone, but it's also like a mindset for us, both from, public sector, private sector, DFIs, and also the financial sector and, the banks, the commercial banks, getting women in the room is a right business. Thank you.
Thank you very much. Dr. Mediku, I've seen you nodding. You want to say something finally as we wrap it all up?
Yeah, I agree with what that she said. We need to create the enabling environment for access to women SMEs to be enhanced. And that government has done a lot through the National Financial Inclusion Development Strategy that was launched and which is being pursued. If you follow that document clearly, there has been emphasis on the need for us to improve access to finance to women by 2023 to 85%, even though as at 2021, we've done only 63%. That shows that there's more to be done, and all stakeholders have critical roles to play, both the government, FSPs, we have the PSPs, we have the media, and we have all institutions need to play a role. And I don't believe today this improve access to these women-owned SMEs will be growing the economy. And as we grow the economy, it means that government will get more revenue. Government get more revenue, more people will be employed. Then that multiply effect will lead to the economy developing. So the importance of women in terms of economic development cannot be overemphasized. And we have critical roles as regulators from Bank of Ghana and government and FSPs. We have very critical roles to play. And she really stated all the things that we need to do.
Okay. Well, thank you very much, Dr. Seto Amediku, who is Director of Payment Systems Department at the Bank of Ghana. A big thank you to you, Patrick Lumumba, who is AGF Group Director of Capacity Development, and to you, Jerusalem Fasika, who is AfDB Country Manager for Ghana, and John Ewa, who is the CEO of the Ghana Association of Banks. My name is Winston Amwa. Thank you, all of you.
Please Please show them some love. Show them some love. Show them some love. We will move straight to our second panel discussion, which is on bridging the gender finance gap. And the discussants for this particular discussion, we have Audrey Abaka, who's head of SME Agency Banking and Partnership, Director of ABSA Bank. Please put your hands together for her, Audrey. Thank you very much. Yvette Richardson is Country Manager of SG Home of Business Societe Generale. Please put your hands together for Yvette as she joins us upstage. We've also got the head of SME Banking, Omni Basic Bank, Eugene Bawele. Eugene, where are you? Please join us upstage. And then we've also got the head of MSME Lending and Deposit Mobilization at Lechego Ghana Savings and Loans PLC, Justice Sego. Please put your hands together for Justice. We've also got Nishdip Sethi with AGF Group Director of Structured Finance. Please put your hands together for Nishdip. And this particular session is going to be moderated by Esther Dasanu. Esther, please put your hands together for Esther. All right, so Esther, I'm going to ask you to sit here because of the television so we can capture you. Pretty good. Thank you. So Esther will be here. It will need additional seats then. Yes. All right, so they are going to be talking about bridging the gender financing gap. They're going to be looking at areas such as how FIs are facilitating access to finance for WSMEs and the tools that have been put in place to facilitate this process. They'll also talk about product offerings and highlight the challenges and opportunities, as well as identify the gaps and what can be done to serve WSMEs better. Thank you very much. Thank you very much. So, Esther, it's your game.
Thank you very much, and good afternoon to everyone. So very quickly, I'll start by, I think we have heard about Afawa enough, but I'll say this. It's a very near and dear initiative to my heart because, as our president at the African Development Bank likes to say, no bird flies with one wing. No plane flies with one wing. Therefore, if our economies are only focusing on one segment of the market, then it'll be very difficult for us to achieve the level of development that we're so keen to get to. And so for that, women, and most specifically women SMEs, have to be at the front, the forefront, the center of it all. And key partners in their growth, their development, are within the financial sector. So I call the bankers my friends, so you guys can all be very comfortable. But at the same time, I want this, this panel to be an opportunity for us to have frank conversations, to be an opportunity for us to demystify the financial, if you will, journey, especially for women-owned SMEs. So we'll ask questions basically in that way. Obviously, the bank created the initiative because we wanted to see more business for you, because before we get to the women entrepreneurs, our primary partners are the financial institutions. So with that, welcome to the panel. I'll start with the bankers on the panel. Nishdip and I, we know each other very well. So to the bankers on the panel, I'll ask the first question. So women entrepreneurs are known to be a profitable segment. We've been hearing it throughout the day. So what I want to know from you, is this true? Are they really profitable? And if so, how have you experienced it in the work that you're each doing within the financial institutions that you're working into. So Audrey, we'll start with you.
Thank you very much. Very interesting question. So within our setup, when we look at a business that is profitable, we are looking at a customer that does multiple financial transactions. So you are looking at a customer that can take your loan, a customer that can undertake cross-border transaction, for example, your complex, LCs that can crystallize into your loan, and then also a customer that understands the need to, bring the daily sales or, your weekly or monthly sales to the bank. Now, as we have heard through the service, most of the clients that are able to undertake these multiple transactions are the formalized customers. And most of these formalized businesses or customers are male-dominated. So you get a lot more male-led businesses undertaking multiple transactions. And for that matter, you see these clients as profitable. And you have, women are good at savings. So in terms of depositing their funds, yes, they would bring it. But in terms of undertaking multiple complex transactions, it is lesser in that regard. Now, on the flip side, if you are looking at, borrowing, because when we give out loans, we expect returns, and we do not expect these loans to go bad. So once you give out loans, the loan, performs so well, you make your profit. Now, women are better borrowers. So it is more profitable to lend to women than the male-led businesses. And personally, in my institution, I have the statistics to prove that. So, this year, it's been my focus to go all out for women.
Excellent. Thanks, Audrey. So, Eugene, are you finding the same, or is it a different picture?
Thank you so much. So, generally, I think it's the same picture. Well, a good customer generally will be one that returns profit to the business, to its shareholders, and to the stakeholders of the business itself. So for us as a bank, generally, we are looking out for who would return, some good profit on the business. First of all, irrespective of whether it's a man or it's a woman. The second thing is, just like my colleague did mention, research actually has shown that it is more likely for a woman to pay back a loan or a debt than a man. So generally, you'll be tilted towards giving a loan to a woman. But that notwithstanding, the woman has to meet the requirements that are generally set for everyone. I think that is where the problem is. And so for me, I've always made the point that we know what everyone brings to the table. We know what profits there are for banks. We know what profits there are for people when we empower women. I think the bottom line should be that as a group discussing this program, what can we do practically to make sure that it is easier for banks to lend? I think that should be the thing.
You're kind of moving to my question before I get there. I'm coming. Great, excellent. Yvette.
Yes, I think that, to a larger extent, I agree with what they've all said. That assertion has been greatly influenced by the fact that most of our women are engaged in smaller and informal businesses. Mm-hmm. And so their volumes relatively are low. Mm-hmm. If their volumes are relatively low, then obviously their demands on even the amount of loan to be accessed is lower. And so our profit margins as a result of interest charges will also be lower. Mm-hmm. Then generally the conclusion is that their businesses are not profitable. Mm-hmm. But if we are able to encourage them to upscale, to expand, mm-hmm, as a result of access to funding, mm-hmm, if they have the funds to expand, then obviously we can correct this notion.
Fantastic. And then Justice, finally.
Hello. Okay, thank you, Exta. And I want to greet my Kenyan brothers and sisters, Karibu Nisana. And for my French brothers, I will say, Je vous en prie. I want to say that indeed, women and women-led businesses are very critical when it comes to our economic recovery as a nation, even post-COVID. The data gives it or reveals that 64% of women were impacted through the pandemic. And I want to take this platform to thank AGF and its partners for this great initiative. I believe strongly that it's very timely. I believe strongly that that's the right time for us to discuss how we can help our women. And as I said, whether we like it or not, I mean, our women are better managers as compared to the men. And I got to understand this statement when I got married, to know that indeed women are great managers, women can multitask, women can do a lot of things. I watch my wife and she's able to do a lot of things at the same time, and she does it so well. And that tends to reason that indeed women are able to manage well when they are given the needed resources. If you look at the statistics, there is this index by MasterCard index that says that Ghana, 37% of enterprises are women-led. But if you look at the impact, so with this 7%, what is the impact on the economy? What is the impact on their own lives? That's the quality of life. What is the impact on job creation? And that's what I agree with my sister. I mean, the impact is very minimal. In as much as we have more women, I mean, doing businesses in Ghana. And as our group, the group CEO said for AGF, that indeed Africa has the largest percentage of women doing businesses compared to the globe. So we have Botswana, we have Uganda, and we have Ghana being the third with the current edition of the MasterCard Index of Women in Entrepreneurship. So I believe that when women are given the support, when women are given the necessary impetus, they are able to do well, and I'm sure that we'll see the rippling effect on the economy at a whole, and even as a continent as a whole, so we're able to see a recovery of our economies. As we all know, I mean, there are predictions that we are heading towards a recession, an economic meltdown, and I believe that the women will play a very key role in getting most of the economies out of this recession, out of this perceived meltdown, if they are given the needed support. And that's how come I applaud this initiative by AGF, and I know that stakeholders here, including the banks, will work together to ensure that we are able to make the women enterprises more resilient, be able to grow so that they can create more jobs, grow the economy, impact on GDP, and I'm sure we'll have a better economy once women are more empowered.
Thank you so much for that. So we're all in agreement that women are actually a profitable sector. The African Development Bank is not the only one saying it. The bankers themselves, who have the money, said it. So given that they're more profitable, what does it take to do more? What are you currently doing in each of your own financial institutions? So I know that for some of you, there are programs. So if you can speak to the programs themselves, and who do they speak to? Because of course, the women's market is not a homogeneous market. There are all kinds. We talk about the informal sector, and that's also something else that's interesting, is that when we talk about women entrepreneurs, automatically we go to the informal sector. But there's strong women in the formal sector, and those strong women in the formal sector are equally in need of access to finance and technically are the lowest hanging fruit. So as part of your programs, can you also speak to that? So what are you doing for that lowest hanging fruit? And then what are you doing for the women eventually who are in the informal sector?
Okay, thank you very much. So ABSA has been at the forefront of supporting small and medium enterprises, a couple of years back. But at the heat of COVID in 2020, we were very busy developing a women's proposition because we noticed that women were heavily hit. And we worked to launch our Emerge proposition. And the Emerge proposition was largely to economically empower women businesses, and then also design specific solutions that meet their unique needs. How did we identify these unique needs? We actually brought a set of women together and we engaged them because at that time, looking at our SME portfolio, just about 13% of them were women. And it was, concerning, considering the fact that we have so many women entrepreneurs in Ghana and we had that in our portfolio. And that survey, revealed, some insight, and most of these insights have already been captured from the survey, very similar. Women were price sensitive and they were afraid to borrow. Women are good managers of finances. So when a woman is able to leverage her own internally generated funding to grow, it's tough for that woman to say that I want to go and pursue debt funding. So it was that at that level where we need to, find unique ways of convincing these women to come in for debt funding. So the emerge was to provide platform where women can gather like this and interact amongst themselves and learn from each other, was to provide a mentoring platform because, women need hand-holding. Some of these informal women really need hand-holding, and it was necessary that we incorporate mentoring in our program. And then on the pricing, we had to discount the interest rate for women, so on all our lending, if you are a woman, you get 2% discount on any loan facility that you ask for. And then also, we realized the collateral issue was real. Before we introduced the women banking proposition, already we were the first bank to have come onto the market with our SME business solution, offering 500,000 Ghana cedis without collateral and then audited financials. But we actually increased the limit from 500,000 to 1 million. And currently in Ghana, we may be amongst one or two, three banks that has actually boldly come to the market that we can give you 1 million Ghana cedis. You don't need any collateral. You don't need any financials. Just come open account for 3 months and we will be able to support you. As I speak, 2 years ago, we partnered because, to be honest with you, Esther, this kind of access to finance problem that we are seeking to resolve, no one bank can solve this. It has to be a collaborative effort amongst all the banks in the country and then also key actors in the SME ecosystem that have the capacity to offer some level of instrument to the risk lending for us to be able to, largely solve this problem. So we were very fortunate to partner with MasterCard Foundation 2 years ago, and that project is a blessing. So ABSA committed $100 million credit line for SMEs, and 70% of this $100 million is to go to women. And we also committed to support 5,000 SMEs financially, and 70% is skewed towards women, and build the 5,000 SMEs capacity with 70% going to women. In 2 years, let me just give you what we have been able to do, because it's important to talk about impact. We have been able to support over 2,000 SMEs, including smallholder farmers, and 57% of this are women. For capacity building, we have trained 5,300 plus SMEs, and 52% are women. And as I speak, we have disbursed a little over $21 million, and then 57% are women. So these are some of the things that we as a bank, we are doing. And very soon, we are also in the process of exploring corporate group lending, because women are in groups, The emerge banking targets small and medium, but what about the micro? How do you reach them? So currently, we reach them through microfinance institutions and rural banks, as well as smallholder farmers, because like the research said, there are a lot of women in the agri sector as well, because they feed us, and they feed the world.
Thank you very much. Eugene, over to you.
Okay, so I think one of the biggest problems or commonly misdiagnosed prognosis is that SMEs see every problem to be a monetary problem. That tells you that there's a problem when it comes to technical expertise. For us as a bank, Omni Basic Bank, we have become synonymous with the SME clinics because we have observed that many people do not understand the problems that they face, and they would usually ask for solutions that are not tailored towards the problem they have. You can have someone walk into the bank asking for a term loan, but by the time you are done dealing with the problem they face, you realize that they don't really need a loan. So one thing the bank has decided to do, and which they have been doing especially since the COVID-19, is to offer SME clinics to SME businesses such that they are able to abreast themselves with what they need from banks when they face problems. And I think I'm proud to say that this training has probably brought on more than 100,000 SMEs in the last couple of years. One of the things the bank is also doing, especially of late, is to look at cash flow-based lending. You would agree with me personally that most SMEs do not have collateral. And so if you want to go strictly by the laid down, ticking of the boxes for loan application and processes, you probably would kick out a lot of SME applications. And so you need to be able to come onto the table with innovative ideas that would make sure that people are able to access funding without necessarily having to go through the laid down, ticking of the boxes and all of that. I'm sure there are banks here that are not on this panel, but for almost all the banks, this probably is the best time to turn on to and look at SME businesses. Because a year ago, if you probably gave me a loan application, I'll be asking how much I'll get if I put the money in government bonds. Today, it will not be an easy thing to say that you put your money in there, which means that options for investment are limited. And so banks generally will have to tend towards financing SME businesses that are profitable. And for us, this is where we want to go, especially from this year onwards.
I want to kind of pick up on something you said. So you seem to be doing it for SMEs as a whole.
Right.
Do you have a specific approach for the women's segment within that, or are you just bundling it all?
No, so you would realize that there are different segments of SMEs. For example, the target for people, say, who are in the second-hand clothing business will not be the same approach you would have for people who are in agribusiness. So these trainings are targeted. We look at the specific problems that you are likely to face in your line of business. We tailor measure and make the solutions that you will need and give you the kind of training that is required of you so that in dealing with a bank or any financial institution, you are in a better position to make your case so that whatever financial solutions that you need, that can be made for you.
Okay, so it's more of a sectoral approach than in this particular case. Okay, great. Yvette?
Okay, so those of us at Societe Generale, we believe that addressing the challenges facing SMEs, and particularly women-owned SME businesses, require a comprehensive business incubation program. That is how come we have gone ahead to actually establish the SG Home of Business. So it is a business hub where we offer advisory services to SME businesses, particularly the women-owned businesses. We have partnered with 19 organizations who give technical advice to these women-owned businesses to ensure that they make the right decisions in terms of access to finance, where to go, which alternatives are preferred, which ones are cheaper. So we give them all those technical advice and support. We also organize monthly training seminars tailored, to meet their needs. Financial capacity building, managerial capacity building, we offer all of these to them. We have also gone a step ahead to develop women product. When we say women product, we are looking at, eradicating, to a larger extent, if not completely, the various bottlenecks that these women face when accessing credit. We know that the major pain to them is access and timing. We have observed over the period that sometimes when they apply for a facility, by the time approval comes, their project timelines are already gone. So we have put in place SLAs amongst the business unit and the approving authorities to ensure that a credit request by a woman entrepreneur is approved within a specific period. You know, generally you will have credit approvals going beyond maybe 2 weeks. But with the SLAs for women, we are now looking at 5 working days maximum, so that the facilities are approved on time and the finances can be applied to the purposes for which they were requested for. We are also, the hub also provides the platform for networking. We have successful women entrepreneurs who come in there to assist, to guide, to provide mentorship to these women businesses. So on our front, that's what we are doing. And then finally, we know that our women are price sensitive. And so we currently have loan facilities that are more or less discounted for them so that they can access and then upscale their businesses.
Is there a certain threshold of an amount that you're looking at in order, in terms of your target, or is it open?
Okay, so we have 2 categories. We have facilities that are corporate social responsibility initiatives. So for those ones, we have specific limits that we say that we are ready to advance these facilities, mostly collateral free, and so there's a limit to which we can give you. On the mainstream, or the funding that are done not under the corporate social responsibilities, we also, that is where we partner with the African Guarantee Fund, that if we have our limit of saying, let's say 1 million Ghana cedis, then the guarantee can give you the additional, they can provide the guarantee for the additional funds. So here, even though we internally had a limit, we are able to assist you go beyond the limit by accessing the guarantee to top up for you.
Excellent, thank you so much. So, Justice, your financial institution is slightly different than theirs.
Yes.
Right? So, not to call it a microfinance, but microfinance, where we know that there are a lot of women because they tend to come or migrate towards microfinance because they think it's easier. So while this same question goes to you, are you structuring differently? Are you creating something specific for women, or is it just women are already in the microfinance anyway, so not much to do there? It's just to increase the numbers, and maybe it's communication that enables you to do that.
Thank you, Esther. So, Lexeho, Ghana Savings and Loans, as you rightly mentioned, under the Act, we are termed as the specialized deposit-taking institutions. That's what the Act calls us. And as a savings and loans, we better understand the workings of the micro, small, and medium enterprise scale enterprises. And we are part of a Pan-African inclusive group headquartered in Gaborone, Botswana. And over the years, we've prided ourselves in providing inclusive finance solutions to individuals and to the micro and small entrepreneurs. And indeed, women are considered, as far as our product offerings are concerned, across the group. But I want to just speak to the Ghana scenario or the Ghana case so that then I put it in proper context for the purpose of the discussion. So over the years as a business, we've been in Ghana since 2010, and we've supported in many ways in terms of impacting on the sector called the SME sector. Just last year, I'm just giving examples of some offerings that we've intentionally considered women as a point of focus in terms of our strategy. So last year, we had an invitation from GIZ through a project called Increasing Access to Finance by MSMEs. And that program was championed by AFC Gopa under GIZ. So as a business, they approached us. We appreciated the concept as to what they want to do. So we decided to prove that concept by engaging GIZ AFC GOPA on that particular project. And what they did was to present to us about 3 associations for us to work with them. I mean, through that project, they profiled many established associations, and we were able to pick on 3 under the project to test the concept. So they gave us 3 of the associations, and there was one that we found very interesting in terms of the gender balance. There was one that we saw that 80% of that members in that association were women, just 20% were men. So in our thinking process, we said, look, can we look at this particular association, because most of the members are women. And can you guess, this group was the Tailors and the Dressmakers Association. So their name is Ghana National Tailors and Dressmakers Association. And 80% of them were women. And that really interested us to look at them specifically. So we adopted that association under the proof of concept to support them. And I will say on authority that from last year to date, we've been able to support most of these tailors and dressmakers, whom majority of them are women. We've helped them to acquire equipment. Some bought 1, some bought 2, some bought 3, depending on their capacity. And I mean, yesterday I was in a meeting, or I was in a program that they invited me to be part of, and I met some of the customers, and they were happy, at least for us to support them to acquire equipment, to grow their businesses. Some took it for working capital purposes. Some of them had contracts, micro contracts they have to execute. They didn't have the needed finance. They came to us. We helped them to execute their contracts. They are growing. They are making inroads. Some of them have even added on more people, because then once they have extra sewing machines, they will need extra hands. So some of them have even gone ahead to increase capacity by employing people. We are helping to create jobs within that particular ecosystem. So that's one of the offerings currently that we are proving the concept through that particular program we did with GIZ AFC GOPA. So that is one leg. And currently at the moment, we also support schools. And the schools, we intentionally decided to look at the low-fee private-based schools. And we are looking at from preschool all the way to junior high school. And you can agree with me that most of the schools from the preschool level all the way to junior high school level are run by females. And I'm glad that I have some of my school proprietors here. Some of them will take their turn during the Fire Chat plenary sessions. And per my statistics, about 58% of my education portfolio is made of women. As I said, most schools are run by females, they are run by women, and we are proud of these statistics. And the last but not the least, in the course of last year, we also looked at the poultry value chain, where we were looking at what can we do in that chain to support women. So we decided to look at the downstream of the poultry value chain, where we are looking at the women who sell the eggs, whether on retail or wholesale. And we have to, in Ghana, there is a region that when you mention poultry, everybody's attention turns to that region. That's the Bono region. So we picked on Doma, which happens to be one of the areas heavy on poultry farming. So we went in there and we supported these women with working capital to be able to lift more eggs, to sell to the hotels, to sell to the schools. And for that portfolio alone, majority of them, almost all of them are women. You find 1 or 2 of them that are male, but majority of them are women. So as a business, we really understand that women are very critical when it comes to economic recovery, as I've already said. And in most of our offerings, we are very intentional. I know we can do more, and that's what we are thinking through our partnership with AGF. We know we can scale, we know we can do more. We know there are a lot of women-based groups. During their launch, I engaged one of them, and they were requesting that we come into their VSLA meetings to engage their women and to understand what their needs are and possibly design. And that is what we do at Leshego. At Leshego, we don't just come out with on-the-shelf products. Any product that we come out with is really proven and tested. We indeed apply the concept of design thinking in most of the things that we do. We go down there, understand the people, appreciate their needs, and we design a product to suit. So any product we have on the market, comes in and we have that traction already. The last product which I want to mention before I hand over the mic to you is with our flagship program, which happens to be our mobile loan solution. It's a solution that every person in Ghana have heard of. We are doing this solution with MTN called the Quick Loan. So Quick Loan is a well-renowned solution on the MTN menu where you can, at a click of a button, just 60 seconds, be able to access a loan from Leshego through the MTN partnership. And from that data, 36% of persons who have applied for our loans are women. And most of them are micro, small enterprises. These are pure women who pick monies from us to buy. So I remember one time we were discussing the data and we saw that around 4 o'clock a.m., most people were picking our loans around 4 o'clock a.m. And we're wondering, at that time, what are people doing around 4 o'clock a.m.? And we got to understand that from the data crunching that these people are women who are borrowing or taking money to go to the farm gate, to go to the market to buy, to come to the market to sell. And that's what the data revealed. And we were very humbling that, of course, people are able to make a living out of our Quick Loan. And that's the success story. In terms of the stories, there are many. But what I'll say is that Leshego, we are very intentional and we consider women as far as our decision making is concerned.
Thank you very much. Nishdeep, I'm coming to you, but one more question to you, Justice. So women tend to stay within the microfinance sector, as we said. But as you're supporting them, what are you doing in order to enable them to graduate, ideally, and to come into the more commercial banking mainstream sector?
Yes, I agree. And as an institution, beyond just giving them the loan, so we have a culture where we say that banking is gone beyond transactional banking into relationship banking. And if we give loans to our SMEs, we're also interested in ensuring that we help them grow, we help them scale. So we also, from our resources, are able to organize capacity building sessions. And we really work with our schools or we work with our customers along their entrepreneurial journey. We don't just give them the loan and just go to sleep. And we believe that once we're able to grow the SMEs from the micro to the small to medium to enterprise, they stick with us forever. And as a business, we're able to control the entire value chain of their growth. As an institution, we pay much more attention to ensure that we work together, we partner. So we call ourselves financial partners, not financial service providers, because we don't just provide the solution, but we also partner with the institutions to ensure that they are growing and we can graduate them from the micro level to small. And I have businesses that have been able to support where we've been able to grow them from the pure micro and they are now small. We are hoping to get them to the medium, then we get to the large, and we are moving on. So we really work with these institutions on their growth trajectory as an institution.
Thank you. So Nishdeep, obviously, all these bankers are gung-ho about making sure that women SMEs are growing, and they want to do more. So how do we help them do more?
Thank you, Esther. So firstly, I'd like to say thank you to all our panelists because everything that you have said is just right. It's just aligned with exactly what the mission of this program is. And so we're really delighted to hear that there's so many different approaches in terms of product and offering and even support that is given to the women SMEs. So I think it's very encouraging for us to be here today to be able to hear this from the banks in Ghana that are really supporting the women. So what more can we do? I mean, African Development Bank and African Guarantee Fund are here now just to support the financial institutions. So we have the Afawa Guarantee for Growth, which we've been talking about throughout the day, and some of the banks here are also already our partners, and can attest to that the guarantee is the instrument, the financial mechanism that can be used to actually get the financial access for the women entrepreneurs and allow the financial institutions to allocate capital and resources towards actually serving this segment. And I mean, along with that, we also look at the non-financial side of the support that they require. And I think each panelist has also discussed or touched on that in some way or another, that there is that extra support that is required outside of just the financial access, you know, the type of access, as in preparing the women, firstly, is on one side, but also on your own, on your part as financial institutions. The products, offerings, the services, are they in line with what the women need? You know, we've talked about different aspects, maybe the design of the product, the design of the offering, as well as the advisory services that some of you have talked about. Along with that, you know, the market access, because networking, market access, and bringing, you know, the women entrepreneurs to the market where they can offer their services and goods. This is all part of what the Afawa program is able to offer. So what I can just add to what everything that has already been said is that, you know, we're on the right track. You're all on the right track. So all we need to do is, you know, increase or scale whatever initiatives that you're already working on. And this has been said today quite a number of times by different speakers, is that alone you can go fast, but if you want to go far, you got to do that together. So you've all touched on different partnerships that we have, you have as well. So I think that's the main point, is that the partnerships between institutions such as African Development Bank, Africa Guarantee Fund, the financial institutions, the cooperatives, the associations and social enterprises, we all need to come together and create that ecosystem that is conducive for the women entrepreneurs. Thank you.
Thank you very much. So I'm a bit bothered by something, though, I have to say. As much as you're doing in all your institutions so well in terms of pushing the women SME portfolio agenda, the one question that keeps coming up is, how do we find out about it? How do we know? So the question is, how does a woman entrepreneur come to know about what you're doing, whether they're your client or whether they're not your client? So that's my first question on communication. My second question on communication is a personal one to me, because often, and Nishdeep and I have these conversations frequently enough, we can't find the women entrepreneurs that are being supported. If you type in like Google, Mama something something, she doesn't come out, but she's on your list. So on this particular aspect, what can you as bankers do also to promote or provide more visibility to the women SMEs that you're supporting? And it's a really critical point, because we know that women are also looking for mentors, right? And they have a tendency to look up to other women who have done it, and they want to hear from them. And those women happen to be in your portfolios. So what can we do?
Okay. So what I would say is that, one of the speakers mentioned, the earlier panel mentioned that, I think it was a question, one of the comments was that, bankers, I think the moderator, we are not willing to support SMEs. And I was sitting there and I was asking myself, is it that we are not willing or we are not visibly out there to let the world know what we have to offer? And that is one of the things that I personally think in my bank we haven't done well. Silently, quietly, we've been supporting SMEs extensively. Like I indicated, we're the first to come out with a business solution loan. But to what extent did we engage the market that we have this on offer? So it's just recently, last year, that we became a bit visible. And what we are currently doing is that we are targeting certain business associations that have large women groups. So, for example, Ghana Union Traders Association, last year we signed a partnership agreement with them, and we were on the market visibly. And the agreement is for us to support at least 1,000 of their membership, 70% of them are women. And then also, we are targeting the radio stations that are largely used by these women to send our messaging across. And we also, when you look at the SMEs, where they are, go to the market, go to your Mokola, go to your Northford, your Ashaman and all that. So now we work with the market queens, where they are able to galvanize these women together so that we speak to them. Personally, one of my interest and passion area is educating. I'm a teacher, by calling. So I leverage my gift and my talent, and with a team, we go to the market. We are on the ground, to be honest with you. We are on the ground. The team is on the ground educating, and this year, women's sector is a focus area for ABSA. So this year, we have a huge communication budget and a very solid plan in place. Very soon, we are developing, we are revamping our solution to the women, and very soon we will launch onto the market aggressively. And I believe that the entire Ghana would hear of us.
Fantastic. Yvette?
It will interest you to know that I came along with our communications and publicist of the bank.
Fantastic.
He is here to have a first-hand information and go back and then publicize this whole thing at our various social media handles. So we have taken it a step forward to make sure that whatever we do concerning women SME businesses are out there. Previously, probably we waited for them to, get to us at the various branches. But now, as she rightly said, we are working with various associations. We go to them. We announce our presence. We tell them that we are located here. This is where you can find us. And it's been interesting. I think since last year, they walked to the business hub, and the exclamation is, "Oh my God, why didn't we find you earlier on? How long have you been here?" So that has given us the understanding that we have to make ourselves visible to them. And we are using all available media outlets to do that. We are also, as we said, in strong partnership with the various associations to ensure that they know about us and they take advantage of our services.
Fantastic.
All right, so thank you so much. Maybe before I even come to the communication, I just wanted to pick up a line or two from where Nishin left it. So you would probably realize that all the things that we are saying here, does appear that the banks are doing very well consciously towards helping, businesses that are led by women. The other reality is that there's still a funding gap. If you look at the latest Monetary Policy Committee report, it does show that loans and advances to the private sector, which mostly is comprised of SMEs, reduced by 14.5% compared to a contraction of 1.3% in 2021. It will mean that banks need partnerships such as risk-sharing partnerships, where they are able to de-risk some of the facilities that they give to women-led businesses. And for me, I think that's where the likes of the African Guarantee Fund, Afawa, even the AfDB, all these partnerships come in. If you take countries like Ethiopia, the World Bank Group, for example, is financing up to 70 million for women-led businesses, direct funding. So I think that for these multilateral institutions, this is where they can come in and help the commercial banks here in Ghana to upscale on the lending that they do to women-led businesses. When it comes to communication, admittedly, I think that we probably haven't done much as commercial banks to tell the story that we have so churned out all these years. For us as a bank, one of the things, for example, we are doing this year is to particularly look at women in male-dominated sectors. So, for example, construction. You would hardly find women businesses in construction, the construction sector, say cybersecurity or fintech. So when we find women in these sectors, for example, then there's an added interest to help them scale up. For me, I think that these are things that the banks can, can propagate in terms of the success stories. Unfortunately, we haven't, done that. And for me, that's one thing that we'll take from here, that, tell the good story, because you are the one who is making it happen. And for me, that's what I want to say.
Excellent. Thank you so much. That's it.
Okay, thank you, Extra. So, with Leshego, people always do chastise Leshego for not being out there in terms of being loud in terms of marketing and promotion. I remember with the quick loan product with MTN, even up to now, people think that it's an MTN offering. They think MTN is the brainchild behind quick loan, because as a business over the years, we've not really been intentional about marketing and promoting our offerings. But what we've done, which I feel is working for us, is the fact that once we're able to identify the market niche, we work through or work with associations. So for instance, with the poultry I mentioned, we are working with the women in poultry value chain. At the moment, I mentioned the tailors and the dressmakers. We are working with the Association of Tailors and Dressmakers. When it comes to the schools, we are working with the Association of Private School Owners. So yes, we are not loud. Yes, we don't do a lot of promotion and marketing, but we are able to work so well through the association, through our relationship with them, to have access to these women and access to these members who will need our offering, who will need our solution. So that has worked for us. However, as I said, there are calls that we need to be out there, we need to market, we need to promote. That is fine. I mean, we are still taking that feedback in good faith. But however, as a business, once we know our niche market, we are able to really get to the members. And I'm seeing a trend that almost every business now wants to be part of an association. And as was said, if you want to go fast, you walk alone. If you want to go far, you work together. So I'm seeing that now most enterprises belong to groups that are well established, and we go through that medium to have access to these people. For me, and as Mr. Iwa said, women are most risk averse when it comes to accessing credit specifically. And just during lunch, I was talking to some of them, and they're like, they're afraid when they go for credit, because they know when they default, the banks will come at them. So that kind of risk averse, that kind of risk mindset tend to, prevent them from approaching banks for support. But I believe what we need to do as an institution is to give them that comfort. That, look, we don't bite after all. If you come for a loan and for some good reason you cannot pay, it's a matter of communication. It's a matter of relationship. Once you approach the bank, we have listening ears. No bank will turn a deaf ear to a genuine concern from a customer. So we'll encourage our women entrepreneurs that the banks are very friendly. Sometimes I know they're intimidated by the suits that we wear in the banking halls, but don't be intimidated at all. If you have issues, approach the banks. We are willing to listen and ensure that we're able to address your concern accordingly. So don't get scared when you walk into our banking halls. As for the suits, that's our regalia, or that's our official wear, so that shouldn't be a problem.
Fantastic. So I have one more question, but before I come to that, I wanted to ask if there were any questions in the room, especially maybe from women entrepreneurs, to our esteemed panel of bankers. Or was it very clear? Yes.
What they are doing in terms of sampling the number of banks, the rural banks and microfinance, in terms of granting access to women. And I want to find out, where is our problem? Because listening to the initiatives and all the works that have been done, I would seem to believe that the banks are actually providing women with a credit as against the data we saw. And then when we are talking about access, what are we looking at? credit, loan, investment, and the others? And how do this impact on the livelihoods of the women clients? Thank you.
Sorry, I think we missed the first part of your question. Where is
the problem?
Where is the problem?
Where is the problem? Because as we speak, we are actually talking about the guarantee fund. And in all the conversation, I haven't seen the issue of risk averseness from the bank as a barrier to providing access to women. ABSA, fantastic, Societe, Leshego and others, and as well as the rural banks. When it comes to finance, we don't necessarily segregate the client to say, because you're a woman, you are risk averse. We grant the loan as it is. But if you connect with why we are here today, in terms of the guarantee fund, which is a risk-based fund, if I understand, not necessarily providing funding, then we are already in it, and we have not, in quotes, said that because we find women riskier, we are holding back credit to them. If we are holding back credit because of risk issues, then we can say that in order to undertake the risk activity, a risk fund would help and push the agenda as compared to fund. I see an issue of access to funding for the banks to on-lend in the right terms, in terms of duration, cost, and others, as against the issue of risk. This is my understanding of the conversation. So I want to find out, where is our problem?
Okay, so in other words, ladies and gentlemen, where is the problem? Because obviously you seem to be doing everything right. Meanwhile, the gap is still there, and the gap seems to be widening. So what's going on, in other words? Is it risk? Is it not enough money in order to lend? Is it that the market is not responding? What is it?
Okay, so let me come in here. So the problem of access to funding is real. It exists. And it exists in its magnitude form. If you look at the data, 42 billion across Africa, and you are, working to unlock 5 billion out of that. So that problem exists. What the banks are doing is also working to unlock an aspect of that. That is why I said this is a big elephant that not one financial institution can solve. That is why there is the need for partnership amongst the key actors within the ecosystem to work together to unlock more of this access of funding to the SME. There is also the problem of the informal nature of these SMEs that we need to solve. Because the banking system, especially the commercial banks, are heavily regulated. So we cannot say that because we want to support SMEs, we are totally relaxing our requirements, our framework, and just investing into the market. It doesn't work that way. The regulator has guidelines, they have policies that governs what we do. So we'll continue to ask those questions. We'll continue to ask for those information. We'll continue to do our analysis. But in those activities, not many SMEs would qualify. You understand? So what the banks are trying to do is, to some extent, we have embraced some level of risk where we are saying that we can lend without collateral and minimal requirement up to this threshold. But beyond that, all other requirements, all other framework must be followed, because the depositor's money must be preserved and protected in its sanctity. And the shareholders' capital, we must also return onto the shareholder. So the problem is this. So that aspect of how do we help these SMEs to formalize the operation exists. And we must find solutions. So that is where the technical assistance opportunities, partnership with the likes of the MasterCard Foundation, who also supports the technical assistance, are all helpful and useful. And then the SMEs themselves, you understand, availing themselves for these capacity building is also a challenge. And it's a problem that we have to solve. So it has its own dimensional areas.
Maybe just one more, Eugene, and then we're running out of time. But
Right. So if I understand my brother from ARB Apex Bank, my understanding is that it appears the banks are doing all the right things, yet there still is a problem. Yes, the problem exists because the gap is wide. I think that's the honest answer. The banks may not have the full capacity to solve the problem alone. And just like is that Audrey mentioned, the fact that you are lending to a woman-led business does not mean that you can relax the rules. This is a heavily regulated, business or environment. So the need for others to come on board and help solve the problem cannot be. It is required now than ever. That is why, for me, I feel that this program is at an opportune time, such that banks can leverage on the possibilities and opportunities that exist for partnerships to de-risk these kind of businesses and scale up in terms of the offerings that we make to women-led businesses.
Thank you very much. So I think in closing, and with everything that has been said, financial institutions have their realities, absolutely, as Audrey said. However, having said that, there's a keen interest in supporting the SME, and more specifically for us here, the women SME market in growing and to grow in accessing the funding that they require to do that. However, women SMEs also have to play the game, meaning they have to approach the financial institutions. That's number one. Number two, they have to adhere to the different opportunities that are being put before them. So it's not about money first. It's about the relationship that you're creating with your financial institution. And with that, how you're actually developing the data required for your financial institution to assist you in accessing the fund. And there actually lies a good chunk of the problem. And then thirdly, of course, it's about repaying their loans. However, because women repay the loans, then that's not such a big of a problem. But if it were to be a problem, then the communication between you and your banker, therefore, becomes important. Hence, the need for a relationship that is established between you and your financial institution. So with that, I want to thank the esteemed panel very much for your inputs and welcome women entrepreneurs to really take the opportunities that is before them. We want to see you grow. The money is out there for you to grow. Thank you very much.
Thank you very much, Esther, and to our group of panelists. Please put your hands together one more time for them. They've done an awesome job. And so we're billed to go for our coffee break, but we're hard-pressed for time. So we'll quickly do the final panel discussion, and then we can do our coffee break and conclude with today's program. Let me invite upstage. It's actually supposed to be a fireside chat with WSMEs on their journey to access and finance, including incubators working with WSMEs. Ladies and gentlemen, join me. Welcome Josephine Asamoah Ba. She's a school leader and also owner of Willie Bank School. Please put your hands together for her. Also joining us is the Chief Executive Officer of Black Park Interiors Limited, Patience Atap Prempe. Please put your hands together for her. And Sylvia Konedu Tema is with Contem Creations Fashion House. Please put your hands together for her as well. And this final round of panel discussion is going to be moderated by Sonia Barbaria. I hope I got that name right. Sonia Barbaria, right. Please put your hands together for them.
Hello. So great. There is still so many bankers, I think, here in the audience. How many bankers still there? Okay, great. So the objective is to meet those three incredible women CEOs running their own businesses here in Ghana and contributing also to the economy of Ghana. So we will be meeting them. At the end of the discussion, we will invite you to network for a coffee break and maybe raise money for them. Okay, so the audience would like to meet you, Josephine, Patience, and Sylvia. So maybe you can introduce yourself. And I would say, pitch yourself. You know that investor would like to invest more in the entrepreneur. So in an open way, let's meet those three. So we start with you.
Yeah. Thank you very much. I'm Josephine Asamoah Ban, born and bred in Ghana. Where do I start from? Yes, I am a proprietress, a CEO of a school, basically a basic school from
international school.
Come again?
International school or?
Yeah, it's not international, but it's when we say international, it means I use 3 or 4 languages, but I use only 2.
Wonderful.
French and in English.
Excellent.
Yeah, so we say it's a complex because it involves both from the preschool up to the basic school with both Ghanaian curriculum and then the British curriculum altogether. Yes, from where we are coming from is a village. We have not heard any before, Damfa. All the way from Amahia, Dodoa, every stretch. We began our school with just 5 students about 17 years ago. And imagine Ghana here, 17 years ago in that remote area. There was no private school over there. I got married, a young girl, I completed my training college, went to GS, posted to Bona Hafo. I said, no, I can't stay there. I have to come back to Accra to live with my husband. So I have to work with my profession from the GS, the government sector, to establish my own school. And looking at the area, there was no private school, nothing like preparatory school in the area. And it's a Ghana-dominated community. So over there, looking at the environment, the indigenous Ghana, as we know, let's understand what is called education. Even with the public sector was a challenge, how more with the private sector? So you have to convince the parents to enroll their ward in the private sector with a fee. It becomes something of its own. So we have to start from there. And then we needed help from the financial institutions. You go there, from the teaching age, they wouldn't like to help you because, come on, you don't have the requirements. You know, come to you with a wooden structure, muddy area, no access to the place, no street name, nothing. And you go there, that you should help you to establish something of that, so they wouldn't do that. So we have to go for friends, families, husband, have to come in and all that. But then I believe that at the point when we realize the thing is going to grow and going to be good in success, we have to go in, still go into the bankers, knock at their doors, still pushing. Because now the school was growing, the number was growing from 5 to 60 within 3 months. Because you have to go to house, beg parents, put a uniform on the kids, carry them on your back. There was no transport to the school. So you have to carry them at your back to the school. Then and there, we tried to seek to other financial institutions for assistance, but it wasn't easy. Because you get there, you talk to them, one or the other, they said, oh, madam, we need a collateral, you don't have a land, documentations, then registered land, a car shouldn't be more than 5 years of age from manufacturing before you can access a facility. Looking at where I'm coming from, Damfa, that place, how will I get a car of I'm 5 years old from manufacturing to access a finance support from a bank? I have to go back to my village and start crying and see what I would do. So I do some small farming at my area to assist feeding and all that to support. But then in a nutshell, as we speak, I can boast, not in the rural area, but then as the municipality, among the best schools, I'm part of it. Yes. This year, students were crying, no schools, no grade. But I tell you, I had a good grade in my school. We are now over 650 students in my school.
Wow, excellent.
Yes. And I'll give a talk about Leshego, which later they came in to assist us. We have our battles, we have about 40 classroom block, tiled, everything is set. So I think with the determination, women, we can do better.
Absolutely.
Thank you very much.
Thank you. Patience, what about you?
Hi. So my name is Patience Ataprempe. I run an indigenous Ghanaian company. We've been in existence for 33 years. We started with a staff strength of about 3 in 1990, thereabout. And we are about 80 permanent staff with a lot of contractual, casual workers as well. So basically what BlackPack does is in a male-dominated industry, which is furniture. I'm sure each and every one of you has a bit of BlackPack in your home when it comes to furniture, your wardrobes, your office desk, your kitchens and everything. All furniture companies source their inputs from BlackPack. We have 3 business units. Retail, we offer services, and also do installation, which we call manufacturing. Retail takes a chunk of the business. It's about 80%. The services that we offer is we have machinery to cut precision sizes of boards for the carpentry industry. So both big and small furniture companies or carpentry companies come to us. So when they buy the board, we have the machines to cut to size for them to come and build in your homes. And that's why installation of kitchens or furniture is very easy these days. If a carpenter comes to your home 2-3 days, they have been able to assemble a kitchen and you are wondering what happened. But a chunk of the work is done at our side at BlackPack. The other business unit is the installation side. So we come into your homes, we take measurements, we put up a quote, we do a 3D for you to look at what your furniture, your kitchen, or your wardrobe will look like. And then you give us the go-ahead and we manufacture. You pay today, 2 weeks, we are in your home to do installation. So basically, this is what we do at BlackPack. We are the leading furniture inputs company. We have 4 branches, 3 in Accra, 1 in Kumasi. We also will launch our e-commerce very soon as we try to follow where industry is going in terms of digitization. In my journey, I would like to highlight a few things which will be in relation to what I think will be in relation to accessing financing. So when I started business at the time that my education background was polytechnic. 8 years into business, I decided to go to school to continue my education. So I enrolled in University of Ghana, came out with banking and finance. And the reason is that the business was started based on intuition. And you realize that intuition doesn't take you further. It will take you to a point where decision-making, scaling up, transforming becomes very difficult and challenging. Data collection that banks may require to give you financing. If you don't have that background of that education, it will be very difficult for you. So I laced my running the business with a 4-year degree course in Legon. After that, I saw a marked improvement in running the business in terms of hiring people, HR, automating processes, putting structures in place so that if the bank comes and they want to offer you some funds, you have data. I employ so-and-so people. You know that this is the sales that I have. You have your customer base. They see progression over the years. So 2 years after my first degree, I went back into school and did an MBA in finance at GIMPA. So this also enabled me to scale up more, have confidence in hiring higher educated people, because now I can reason with them and I wouldn't feel left out when they are talking, or maybe I can understand them when they are talking. So that also showed a lot of progress in my work. And then came on my bank. I was very risk averse in terms of debt. From where I was coming from, debt wasn't anything that I wanted. I had done a lot of bootstrapping. As has been said, women plow about 90% into their businesses, and that's all I was doing. The bootstrapping worked for me. But what I realized I did wrong was that I should have taken debt, a bit of debt, and added it to my equity. I opened myself, while I was bootstrapping, to competition. Because if you brought in a container or 2 containers and it runs out in the next 2 months, the reorder cycle takes a while. And so you have people walking around with your product and asking, do you have this? Bring this. This person is not able to supply the demand. And so I opened myself to a lot of competition. And then my bank came on and asked, do you want credit? Even that, I didn't want it, because I want to go to bed with a sound mind, not owing anybody, knowing that everything that I have belongs to me. I don't know why we think that way. And another thing we think about is that you don't want to die and then they look at you and, oh, she owed $5 million. You want everything to be yours, and then it looks like, oh, you've done very well. I don't think that on those lines any longer. So my bank started with 200,000 Ghana cedis. And I was so scared, going to bed thinking that I owe, and every day I'm calculating. So if I take 200,000 out, this is what I have left, and this is for me. Until gradually I got to the higher heights of borrowing. And I haven't regretted. We have scaled, we have transformed. We look forward to higher, doing bigger things. Right now, we've spoken to a Turkish company. We are putting up a multi-story prefab, RFID, operated warehouse where everything is automated. The lift system is automated. And just to reduce pilfering, reduce damaging, reduce quick supply to clients. And especially because we are going to go into e-commerce, we have to ensure that when you put in an order, you can track it on our website and know that it is at packaging, it is being delivered and everything. So we have to have this automated warehouse. And also in attachment to that is a ultra-modern factory, because we intend to go into some standardization of furniture. I can't release every information going into the future because there are competitors around. Thank you.
Sylvia is operating in the fashion industry, and she will bring some colorful vibes. Yeah, thank you.
Thank you. I'm Sylvia Kunedu, a fashion designer and interior decorator. I also started my journey in the house after graduating from the Polytechnic. Actually, I wanted to go out and start something, go for a shop and start there. I went to banks and they told me I have to bring collateral. As a student that just came out, not having anything, how do I get collateral to go for loan? So I started in our porch. for, let's say, 2 years in the porch. I was managing there until I was able to raise my money myself to rent a shop and move to the shop so that I can start and continue very well. So I worked for 3 years in the shop. God being so good, I had about 20 students that I was training during that 5 years. So after that 5 years, I decided to add some things to what I was doing. So I went to learn interior decoration. So after the interior decoration, I wanted to enhance my work with some equipment and other things that I couldn't afford. That is when Abokobi came in to help me rent, buy some things. So when they came, actually I was afraid because the time I needed them, they did not help me. And now that I don't need them, they came to me. For what? Why are you here now that I'm making it? But at that time too, I needed their money, seriously. Because without that money, I couldn't do it on my own, those things that I needed to buy. So when they came in, they gave me the interest rate and what I'm supposed to pay at the end of the month. I was like, wow, are you taking all this interest from me? With this small money that you are giving, your interest is even, it's almost the money that I'm taking from you. So I was like, I'll do it on my own. So I started buying the things gradually. But I got to a time, still, I needed their help. So I went to them, went for the loan, and I was able to purchase all those things I wanted to purchase. And God being so good, till now, I have a fashion house. I have two fashion houses, and I've been able to train over 100 people. I normally pick children from villages. Then I bring them to my shop, train them, rent a place for them, and train them so that they can also have a future as I'm also having. So Quintem's Creation House, how do I say? Quintem's Creation House came to this far through the help of bank. Then recently, Leshegu came in. I'm the head of GNTD, Domi Zone. My people wanted to buy machines. So, since they did not have money to buy it on their own, we contacted Leshegu. When we went to them, you know, dressmakers, we don't like loans. The moment you mention loan, that means you want to collect all their money or you want to close their shops. So, when I introduced Leshegu to them, at first, they didn't approve of it until it continued. So it was later that I told them that it was through loan that I was able to come this far. So if they can really save money, it's because they don't know how to save money. That is why they are afraid to take loans. If you know how to save money, you can take loans. So Leshegu also came in, and our GNTD, the regional GNTD also came in and also spoke to them. And as at now, a lot of my people that were in need of industrial machines have it now, and a lot who are waiting for their own. So I would say through Leshegu, GNTD Domi Zone have achieved what they wanted to achieve. Thank you.
Thank you. So maybe the audience and the some of the inspiring women or role model can inspire you. The spark to start your business, is it related to a family role model? Is it related to how did you jump into this entrepreneurial journey?
Okay. Once a teacher, always a teacher. My family is a house of teachers. My father was a lecturer. My mother was also a lecturer. So you can imagine, born in that house. Definitely you grow up to become a teacher. So since I went through my teaching education at Abetifi Training College, coming back, going to the university and doing all that, definitely I have the passion for children to give them that knowledge that I'm able to acquire. Though I had the opportunity to get good schools to attend, but then looking at some of the children who didn't have that opportunity, and I have the passion for it, I don't do my business for money, though we all want money, but the passion. I see these young children who are talented. I have a boy in my school as we see now. He had 7 ones. I sponsored him. He's now at Adisada College. And the boy is an orphan. I went to a class to teach him English. My happiest day in my life. He told me, Madam, I'm not happy. I said, my happiest day, not today. My happiest day. You are 15 years, so within your life cycle, not a single day. He said, Madam, no. So I can't write anything. I said, you don't mean it. And the boy was shedding tears. So I brought him to my office and asked him. He said, my mother died, and my father died whilst I was watching him dying. So I couldn't hold back my tears. Since then, I've not been of myself. And I always tag the boy for school fees. Go home and bring my money. So since then, I stopped sucking the boy. I said, you won't pay fees again. You will stay here, and I will make sure you become the happiest boy. And write me that story, my happiest day in my life. So at times, it's not about, it's the passion. Yeah. I have the passion for the work. I love kids, and I'm happy when kids are happy. That's my reason why.
Excellent. Thank you.
When I see a child...
And we feel that passion.
I feel it when I see a child crying without any reason. I wouldn't mind. But if there's a reason, I should ask, why are you crying? What is your problem? If I could, I will. If I can't, I'll advise. So honestly, the reason why I went to this school operating is not about just the word quotes business as we see, but the passion for the work. To see that young, at least the average parents, to be able to roll the child to get a quality education that he or she needs. And that's why I have the passion to operate or establish a school. So and I'm happy when I see them. I have students who are in the university, completed their universities. When I feel so happy. When they see, they hug me, and I'm always happy. Yes. That is my joy. Thank you very much.
And you succeeded to transform your passion also into a source of revenue.
Yeah.
Business.
Yes.
That is
yes.
very important.
It's true. Yes. Though I have the passion, I still will be able to get some revenues. I may change myself. I have my colleagues who are in the education system, BGS, and when we stand on the same platform, we see the difference. Though they are also taking the same salary, you can see the difference. So though I'm impacting knowledge, I'm enjoying my passion, yes, I'm also getting some revenue out of it. Oh, thank you very much.
Thank you. Patience.
So, what turned me into an entrepreneur? I remember at the age of 10, school was in recess, and I used to babysit my kid brother, and he was very troublesome. So one day I enrolled him in school. And after a couple of days, I realized I was restless sitting home with nothing to do. So I picked a bucket, fetched tap water into it, scraped some ice cubes from my father's Bosch refrigerator, and headed to the market to sell water. This was in the days where we used 1 cup to sell water, and everybody drank from that cup. So fast forward, from there on, I had traded till I completed Polytechnic. Then I went into corporate. In corporate, I continued to run business on the side. Fridays, I'll head towards Lagos. Sunday, I'm back in Accra. I'll take my wares to the Kaneshie market, sell it on credit to the women. 2 weeks, I collect my money, I'm back in Lagos again. I did that till the revolution period when everything was seized at the airport. So I lost capital, profit, everything was gone. So I headed out of the country, went into corporate again. For 5 years, I knew that was not my place. And I can also largely say that is because my parents, my father worked with IRS, but my mother was in Makola. I come from the mountains heading towards Kumasi, so you know what we do over there. So it's a trait that we have. Regardless of how educated we are, we end up owning a small corner shop. So I believe it's coming from home. It's also coming from not, I have interest in multiplying things, because I couldn't sit in the office. I mean, I excelled in the office as well, in corporate as well. But I just can't sit at one place, continue to do the same thing over and over again, and being told what to do, and that's the limit. Whereas if you're an entrepreneur, you are the messenger, you are the MD, you are the cleaner, you are everything. And you have your eye on every ball, and that keeps me going. So that's how I got into entrepreneurship.
I became an entrepreneur because when I was a child in the primary school, I was good in needlework. I normally cut my mother's clothes, sew dresses for my siblings, be sewing dresses for toys and those things. So after JHS, my father saw that I had interest in sewing. He asked me to go to vocational school. So I went to vocational school, and I was very good. I was very good at it. So from there, I continued to Polytechnic. I don't have any fashion designer in my house. I don't have any, but I had the passion, as she said. I loved sewing. So till now, everything that I'm doing, when it comes to sewing, I sew with my heart. I do everything, and I'm happy doing it because that is what I want. Thank you.
Excellent. We know that most of the women entrepreneurs are facing a lot of challenges, including maybe social, cultural, the work-life balance, access to finance from the beginning to maybe for the growth of also of the business, the working capital, the lack of skills. How did you manage to overcome those challenges, or maybe you have additional challenges? How can you share with maybe the audience or the entrepreneurs connected on live and can be inspired by also your insight on that?
Okay, it's not been easy from where I'm coming from. I used to say that. Being a wife, mother of 3, and then initially stay with your in-laws at the same time. This is our Ghanaian community. Stay with your in-laws, with your kids, with your husband, working at the same time. You are the manager of the house, manager at your school, manager with your family, because other social responsibilities also there, funerals and all that, combining all together, and the perception of you establishing something, you have money, you are rich. So it's like beginning, we become like a laughing stock. How can you establish a school in this remote area? How many kids are in this area going to establish a school in that bush where there's no light? How do you manage? So it wasn't easy. But then, as I said earlier on, if you have the passion for it, you go to the extra mile. It doesn't mind. You still go to the extra mile. So doing other things like farming a little. I did home science at the training college. So at least I know how to bake little things, baking, selling all those things in the school for the primary, those kids, they love buying those petty things. So out of this, there's some little income. The banks were in there at that time because we're teaching age. They wouldn't like to come and risk. And as my sister said, you're also afraid of involve yourself so much that if you're not able to pay, that your small little land you're able to acquire, they'll come for it. And that's the end. You become a laughing stock in the community. So you try your best to adjust yourself by doing other things just to make sure your vision comes to pass. So as I said, I think that was how the challenges we went through. It wasn't easy. Initially, it wasn't easy at all. At times, you owe your teachers salary. When you see they have to run away, because they are coming to you for their money. The month has ended, they want their salaries, and you tell them stories. And there is no school fees, and please, and you keep on saying, and they all stop working for you. So you have to do multitask, be the cleaner at the same time, be the cook at the same time, be a teacher and administrator at the same time, because if you dare employ more, you end up running your business.
And how did you secure the funding?
Come again?
How did you secure the funding?
The funding, it wasn't easy. And then, as I said, funding wasn't easy because there was not much students in the school. But then because of the other things I was doing, this petty trading, baking, farming, I farm. I did small farming at my backyard. So those feeding fee, we private schools, we call it feeding fee. So me going to the market to buy maize, I have it at my backyard. Buying cassava for cassava, do I have it at my backyard? So I go in for that one, and then I feed the kids and take money out of it to be able to fund other things. That's the way I began with. I did my own farming, backyard farming, to support the school at the initial stage. But it's no more because I've used all the land for building. But initially I was farming at the same time teaching. So that's how I did it.
Congratulations for overcoming all those challenges.
Thank you.
Patience, what about you? How did you overcome, and what were the biggest challenges while running your business?
I think
starting and running your business.
I think to a large extent, accessing financing for me has been pretty easy. And I would say so because I even started running the business with debt. And I say with debt because I had refinanced a home, a mortgage, and came to Ghana with that money. That was everything that I had. I think 2 years into the business, as the business grew, I realized I needed money. And this were the days of Bank for Housing and Construction also. So I didn't have any land. I went to the bank and they wanted a landed property and all kinds of things. You have to do a proposal, projected cash flow. I knew next to nothing about those things. And so I had gone to my dad, and as with various speakers were talking this morning, I asked myself that when I needed the family's house as a collateral, why didn't I go to my mother? And it's because from the word go, your mother doesn't own anything. However, the house belongs to both parents. But I went straight to my dad. So I went to my dad and I told him I want to take a loan and I want the house as a collateral. He wasn't very happy about it, but he was very confident in me. He knew who I was. That
so he supported you?
Yes, great. He supported me. He gave me the documents and everything. I took it to the bank and I was given not as much as I needed, but they gave me something which sustained the business until I started getting properties. But I'll say largely also that ABSA has been a very good help. The last facility I took from them, which was huge, they didn't ask for any collateral, but rather used the property that I was buying as a collateral. So as it stands, my own properties, nothing is collateralized. I haven't used anything. And I think the journey of accessing finance has been pretty easy for me. I know the challenges that face financing affects everybody, both men and women. However, it's not gender specific, but it's just a disproportionate aspect of it that women suffer when they are accessing loans.
As I said earlier on, I started sewing in the house. So I was saving from the small money that I was getting from my clients. That is what I saved for 2 years before I was able to rent a shop. Then after 3 years, I took a loan with and used the equipment in my shop and one container that I had as a collateral to get loan. That was what I did. Thank you.
Yeah. Maybe I would like to ask you about the skills, the capacity building. Did you benefit from a training mentorship? Do you have mentor that can guide you throughout this entrepreneurial journey? Is it something that is necessary for the successful of your business and journey? Can you share your thoughts and insight on that with us?
Yes.
Beyond the funding, there is also
yes,
the need.
The banks, most of the banks do that. Initially, I didn't know the challenge. You know, when you go for a loan facility, they demand a whole tall list of items. So I asked myself, how do I do? How do I sail through? Okay, then let me calm down and let me start from somewhere. So I think we have those programs, workshops, taking us through bookkeeping, the need for bookkeeping, the need for banking every day, paying money through the bank, using the checks and all that. And I said, it really helped. Because through those training, when I went in for my visa last year, because I was able to bank and then transact well with my bankers, when I sent my statements, it was so easy for me to acquire my visa. And then apart from that, it helps me I was able to know, I was trained to get, this balance sheet, how to balance your account and all that through this capacity training. So I believe that based or through all these trainings, I'll be able to acquire a lot of knowledge, a wide one, of course. So I can boldly say that I can even prepare my own small way bookkeeping, income and expenditure in my own small way through the training that we
helped you in terms of marketing, in terms of
yes.
How to better structure maybe
Yes.
and promote the services you are providing.
Sure, yeah, because for now, when you come to my school, you ask for everything concerning the school, structurized way. I can boldly say, I have this, it is here, it is that. Initially, I didn't know. When you come, how much do I take? Oh, today we had 3,000, but then I used 2,000 to buy chess, and then 1,000 for maize, and then we don't have anything. But when you come now, and you ask me, oh, we banked this, we paid for that, we spent that salaries through the bank and all that. So I think it's really helped. It has really helped me, based through this capacity training and other workshops that we've been through. And it's not only once. Almost every term they take us through all this training. So it has really shaped me, myself, and the school as well. Thank you.
Thank you. Patience.
Okay, so
Did you benefit from some of the training or mentorship or?
Yes, I see my bankers as people who bring the training to my doorstep. There's always a technical advisor, let's say my relationship manager, who gives me a lot of information. I think most of my training too has been the fact that I decided to go back to school, and for some reason I did banking and finance. So I have a bit of understanding. It's not difficult to, talk to me about financing or adding debt or anything of the sort. And in the past, and even now, I've had a lot of banks that I have dealt with have always been surprised that when you call me and you tell me that the money is here, I come in and the first thing is to start reading and not to sign. And they are saying that most people don't do that. As soon as they hear that the money is in, they are ready to sign. And it also depends on when the money comes in. If the money comes in, I do an assessment to find out whether I still need the money. Because if time passes and something else happens and I don't need the money, I don't have to sign and I don't have to take it. And especially also, there are so many hidden things. The banks will tell you this is the interest rate, but there's actually an APR that you need to know. And so basically, these are the questions that I ask. And I normally don't go to the bank. They bring the advisory and the technical support to me at my doorstep. Thank you.
Sylvia, did you benefit from some training? More specifically, I think in the creative industry, you need branding, the quality also of the fabrics maybe. Can you share your thoughts with us on that?
Yeah, I did benefit a lot. CordVet has been doing some classes with us, with GNTDA members. every year Corvette comes, they teach us on how to keep our records, good bookkeepings, and how to manage our businesses. And it has been helping us a lot. And every year to GNTD has been teaching us on how to enhance our works, giving us a lot of lessons to enhance our work so that we can get to where we want to be.
And do you have any plan for export, for example, or did you trying to also grow your business through access to international markets, or more specifically for the creative industry and fashion?
Please come again.
Do you have some plan or vision to expand your business into international markets? Do you have this vision, or?
Yes, I do. I do. I want to sew a lot of things, send it outside to go and sew. I have it, and I want to build a school, a fashion school, so that I can help the needy. I can help them to become an entrepreneur as I am now. So I do have.
Great. Maybe we can conclude with this question. How do you see your business in the upcoming years, or the growth? And are you in the need of raising additional funds? And what kind of advice you can share with other maybe ladies that would like also to start their own business?
Okay, yes. For my sector, establishing a school is so stressful. So for me to expand to, let's say, SHS, no, I don't have that dream because it's very, very stressful. But what I'm intending to do is maybe train the young incoming ladies or women who have the passion to establish their own school, advise them, coach them, and then push them to the business. Give them the pros and cons of the business in a way to guide them and be with them for some time to establish those preschool or primary or just things basically under education, establishing school education at the deprived areas. Because when you come to the cities, it's already there. So in the deprived areas where they are lacking those quality education, but they don't have that enough money to pay that huge sums of school fees. Those young women coming up, I'm willing or ready to help them to grow their business through that sector. I think that's what I'm planning. International-wise, maybe my students perform well, excel well, liaise with other schools in the international body so that they can have this other exposure in the international world. And that's what I'm trying to, or I'm dreaming at, if all things being equal.
But you know, if you can identify some key profile that can also help you scale up your business.
Okay.
You can do it together.
Okay.
Instead of just sharing advice.
Anyway, yes, it's true. But then, as I keep on saying, it is not easy. Some of us starting from the scratch with that stress, you don't want to go any further. But then looking at it from the demand of my community and my municipality as large, I don't have boarding facilities. So I'm looking at creating a boarding facility at my area. That those from the other villages can still enroll their kids in my school if I have those facilities, because it's quite far from other places. So I think per my profile, per what I'm seeing, that is what I'm trying to do in the near 5 or 4 years to come. Yes. Thank you very much.
Excellent, thank you. Patience, your plan on the growing of your business, any need of funding for the growth?
Okay, so for now, the next level we are pushing towards is, I would say, the next generation where they will head towards with the company. We have a succession plan in place. We want to go across the borders of Ghana, and that's why we have ensured that we have processes and structures in place at the moment. We have people coming from Togo, Benin, and Burkina Faso to buy from us already. We intend to do either a JV with them and plant Black Park over there as a franchise. We believe that it is better to have all those structures and processes in place so that when you are lifting the business into another place, you are well grounded and you know the anticipated problems will be minimized. So this will be for the next generation as I try to exit out. The advice that I will give to other budding entrepreneurs, which is something that I do, sometimes I do for APSA as well, mentorship, it's that education is key. You have to be an entrepreneur, you have to have certain character traits, humility, honest, reliability. People have to depend on you. Your yes is yes and your no is no. I would say it involves a lot of hard work. People think when you run your own business, you have your own time, you can do whatever you like. It doesn't work that way. It's rather working 24 hours around the clock. My sleep pattern has been 4 to 5 hours for the past, let's say, 30 years. And that's what it is. And this is the advice I can give to the next, any budding entrepreneur, that it requires humility, honesty, being reliable, and people taking you seriously, and because you are serious yourself. And always plowing back money into the company and not spending.
Excellent.
Thank you.
Thank you. Sylvia.
Yeah. I normally advise my girls. Sometimes after training, you see them carrying pure water, bread or something, carrying it to go and sell. But anytime I see them, I advise them that they should start something. Put the machine on the table in your house. Start sewing. If you sew neatly, if you are good, if you do it very neat for them, you get 1 or 2 clients that will be sewing from you. By 2 or 3 years' time, you can rent a place and start something. So it is determination. They have to determine, this is what I want to be. This is where I want to reach. And with determination and with management and savings, they can get to where they want to be. So that's my advice for them.
Excellent, thank you. So in conclusion, let us congratulate those inspiring ladies for the entrepreneurial journey and the insightful discussion we had. Maybe I can also invite you for a networking session now. And if you would like to invest in them, let's talk. Thank you.
Thank you very much, Sonia, and to your panelists as well. It's been a very long day. We initially were billed to close at 4. I think it's way past 4, and I know a lot of you are tired at this time. And so we're going to wrap up quickly. I want to say a big thank you to everybody who made it for today's program. Just to remind you that tomorrow, the capacity development training session will begin. It will be facilitated by the Frankfurt School of Business. It starts at 10 a.m. To 4:30 p.m. And of course, our target participants include heads of departments for risk, credit, business development, and women SME financing. So that's about it. Thank you very much. And God willing, we'll see you tomorrow. There is a coffee break. So just grab some chicken and some drinks for yourself and some meat pie, and then you can walk home freely. Bye-bye. Thank you very much.